So I'm curious, are you guys more interested in? Are you more interested in the LLC side or the taxes side? I think Jaytron is like taxes. Like what's like more got y'all's interested? Taxes, yeah. The LLC stuff, I wanted to do that first because it kind of plays into the taxes a little bit. But it's not near as long. It's like a page and a half of notes, and the other 5 pages are taxes. So I wanted to go ahead and try to knock that one out. But we'll get going in like another 2 minutes. LLCs, got it. You'll take everything, just bring it all in. I mean, I can make this slideshow. Yeah, I was gonna put this entire video on YouTube. The slideshow is more or less just a guide. It's not really like giving like a ton of like specific information, maybe in like a few parts, but it's more or less when people come in that they at least know what is the subject we're talking about that time. So I can make all my notes available and to give you the doc. That'd probably be more useful. This document right here, all 7 pages. This is just the categories I go on this. You're really interested. Okay, nice. All right. Get going in. What time is it? Oh, it's 6:30. My desk clock is off by about a minute and a half. All right. I guess we're good to go. We're good to go here. All right. So, we're doing this web show today. I wanted to at least dump my knowledge on running your stream as a business. And this could apply to not even just running your stream as a business, but just running a business with an LLC in general. But I'll make a lot of parallels to streaming, obviously, because most of us in here are looking at this from a streamer perspective. Again, I will make this disclaimer a few times. I know it's going to get old. I am not a certified tax professional. I am not a business lawyer or any sort of lawyer. I have no qualifications or anything saying that I know what I'm talking about. So none of anything that I say you should ever use as any financial or legal advice. Okay? I'm only explaining this is how I run my stuff. This is my interpretation of things. And then this is what I would do in certain situations related to this information. So you should absolutely do your own research, talk to your own professionals, everything. So don't use this as like, I could be wrong. And there might be a chance I might be wrong on a specific thing. I think for the most part I know what I'm talking about, but I could be wrong. And in the end of the day, it is up to you guys to do your stuff correctly. Right? So use this as a baseline to do your own research, right? That's like the key thing that I want you guys to take away from this. All right. So we're going to talk about, the first section is talking about limited liability companies, okay? We're going to talk about what it is, what are the different types of LLCs, what is a DBA, for those of you who aren't familiar with that term. If you're looking into setting up your LLCs, there's a lot of terms that you're going to be thrown at you, like pass-through, disregarded entities, corporate veil, stuff like that. So we're going to talk about all this different type of stuff. The key thing to know about a limited liability company, the top level thing, is that a limited liability company is a filing you make with your state. Okay, so when you create an LLC, you file it with your state. I live in Texas, so I filed my LLC in the state of Texas. Okay. I file it in Texas. I file it with the secretary, the secretary of the state of Texas, right? I don't know. Every state's going to have slightly different rules. Every state's going to be different. Some states may expire after a certain amount of time. Some states require you to have EINs, and a lot of this other stuff. So you have to research your state's rules with all of this. Actually, I need to make sure I get this document up because I got links that I'll have to copy and paste. Let me do this real quick. There we go. Put that on that monitor. Okay. All right. So what does it mean to be self-employed? First and foremost, this is kind of outside of LLCs, but just in self-employment in general. If you're an independent contractor, right? So that means you work for a company and somebody pays you, but they don't withhold taxes. You don't get benefits. It's just like, let's just say you work for a company, you make $50,000 a year. You get all of that $50,000 a year. They're not withholding taxes from you. They're not doing anything. Now, they can. Some contract employers, 1099s, will do that, like withhold taxes, but a lot of times that they don't. If you're an independent contractor, you make money performing a trade or service outside of employment. Actually, that needs to say outside of employment. I kind of mistyped on that one. So you've received money. Maybe you did a side job for like one of your neighbors or something like that. Maybe you're a plumber, right? And I do a side job for one of my neighbors, and they want to pay me money, and I do that as a regular basis. That's self-employment income, right? Because you're not withholding taxes, etc., etc. If you're a sole proprietor of a company, you own an LLC pass-through, which is what we're going to talk about. Or if you have like a DBA, DBA is called doing business as, which is like a separate type of filing to basically receive money or act under a different name other than your own. If you are self-employed, your company is you, right? Essentially. So as streamers, right? Like J-Stron and Knight and Kuya and all of you guys, you are your own company, right? So being a self-employed company, like an LLC, which is what I have, and being just a self-employed person, there's a lot of overlap between the two. When it comes to filing your taxes, when it comes to registering, for certain things, having to maintain a lot of that stuff. So when it comes to like filing your taxes, whether or not you're an LLC or you're simply just a self-employed person, if you're an LLC pass-through, sole proprietor, or if you're just a person without an LLC, but you do streaming as a business, you fill out like the Schedule C 1040 on your taxes, right? It's sort of the same process in regards to taxes. Few differences here or there, but for the most part, it's the same. It's the same sort of concept. LLCs kind of provide you a lot of different protections. I think Mr. Miner was talking about this earlier, and we'll go over all those protections as well. For me personally, I used an LLC to combine different sources of income that were related under a single name. We just started also. And it can make things a little bit better for you in general, but it does cost a lot of money. So in legal terms, taxes terms, a small business can be an LLC. It can be an LLC pass-through, but typically you have employees, you have EINs, you have physical office locations. It can be kind of a gray area, but there is technically a difference legally in tax, code between being self-employed and being a small business, right? So that's sort of the some of the key takeaways from that. What is the next slide? Yeah, all right. So DBAs. All right, when I ran my first company, I did computer repair, and my company was called GeekStop. I know, great name, right? If I go to a bank and I want to set up a bank business account, how do I get that bank name as my company name, right? I needed, at the very least, a DBA, which is I went to the county courthouse and I filed a DBA, and they have to make sure that it doesn't conflict with anything else. I pay a fee, and I officially have a state of Texas doing business as. All right. It's generally pretty cheap. I can't remember what mine was because this was back in like 2007, but I would say it's like $50. It's actually not that expensive. I could then take that DBA to the bank that was now official state form that then the bank could use and open up a bank in that business name. And I could register other accounts like PO boxes and stuff like that, right? If I went to the post office, I could use that DBA to get a bank name to receive packages in that sort of case. An LLC allows you to do the same things. It does have a name attached. For instance, my LLC is called Hacky Things LLC. And I'll actually show you a registrant page of Hacky Things LLC a little bit later on. But they're generally way more expensive because at this point you're kind of setting up a legal entity, right? Whereas a DBA, you and the company are exactly the same thing. So like when I ran my company prior, right? Me and the company were one thing in all regards whatsoever, right? The LLCs set up another legal entity that's separate from you in some cases. It depends on the type of LLC and the type of filing you have, okay? They're generally way more expensive. I think when I set up my LLC and I used LegalZoom to do all my stuff, I think it cost me about $700. And now I'm paying for a lot of things with that. I think the state filing was like $300. I'm paying LegalZoom, their fees, and then I pay LegalZoom to be what they call a registered agent, which I'll get to later, and what that means. And then that registered agent and the LegalZoom services that I opt into, I pay yearly on. But the state filing, at least for the state of Texas, I just pay that one time. Some states will expire your LLCs and you have to renew them, but that depends on your state. Every state's going to have different processes regarding this, so you have to like reference your state stuff. I heard California is like really expensive to set up an LLC. All states are different in their rules, but the general thing is, in the eyes of your federal taxes, you are the same thing, right? Texas, for my LLC, Texas does not have state income taxes, right? So like whenever I go to TurboTax and I fill out all my stuff and it goes to the state section, it's like, oh, you live in Texas, never mind, like we skip it. Now that I have an LLC, I have to file franchise taxes. Okay, so I have to, but I don't owe anything for franchise taxes unless I make more than $1 million in a year. And I can guarantee you, I in no way make more than $1 million in a year. But if I did, I would owe taxes to the state, franchise taxes. Basically, every year I have to fill out a franchise tax form with the state of Texas that says, no, I did not make more than $1 million. I owe you nothing. Go away. But I have to do it because I own the LLC. And this will be the first year I'm doing that, so I got a lot to learn in that regard. You get protections with an LLC, certain legal protections. The main things that you get is that because the LLC that you set up, like my instance, Hacky Things, and the operations I perform within Hacky Things are a layer between the business assets and my assets. So I live in an apartment. My studio is in my apartment. I got my personal TV. I got my appliances. I got my, really nice mattress and bed and everything like that, right? I got my personal vehicle and car. If I did not have an LLC and I'm streaming and I, say the F-bomb in front of little Mikey and his lawyer daddy is like, oh my God, I can't believe you harmed my son, I'm going to sue you, he can come after my personal assets, right? Having an LLC can offer protections in regards like that, where that daddy lawyer, now that I'm operating Ghost from Texas under that LLC, that daddy lawyer can't say, oh, hey, I'm going to come after all your personal assets. There are ways he can, which I'll get into in a second, but for the most part, the LLC is kind of designed to protect you as operating as a business. Legally, debts that are accrued in the LLC, like if I take out a business loan and then after several years my business goes under, I am now not personally liable. They can't come after my personal assets. They can only go after the business assets. Does that make sense? Right? So those are some of like the legal protections that LLCs have for you. So are there kind of any questions over specifically what I've gone over right now? There's a lot more to LLCs, which I'll go over, but that's like kind of like right now. We'll get into a little bit more about the protections and in ways that those protections actually fall away, because you don't always have those protections. All right, there's like certain ways that you'll lose them. But any questions at the moment from anybody? Wait, that yacht is liable? Yeah. Trust me, they have thought a lot of stuff. So for someone who looks at starting a business, helping people stream as well as being a streamer, would you recommend an LLC? An LLC is a lot more for you to learn and start getting involved in, and you have to really start formalizing everything as a business. So if you feel you're ready to take up that next step and this is something that you're going to do long term, you know, it's definitely something to consider. It does provide a lot of benefits, but you have to kind of start doing things in a different way. And I'm going to get into that a little bit more about something called the corporate veil, and what that means. And you know, that will kind of explain, there's no point to get an LLC if you don't maintain certain practices in your company, because then the whole benefits of LLC are completely gone if you don't maintain a organized way of doing things. No questions, go on. All right. So the types, there's different types of companies and corporations and stuff, and there's even way more than this. Do you transfer items to the LLC as business assets to help reduce costs? Example, computer owned by the LLC, not you. Yeah, I'm actually going to get into, actually, I don't know if I talked about the business owning assets. I do a little bit on the taxes stuff. But like in 2017, I did not have the LLC, right? But I did operate as self-employed, right? So I was self-employed. I still filled out a Schedule C on my taxes, and all that. But when I formed the LLC, and I formalized it, I more or less personally just said these assets now belong to the company. Because when it comes to taxes, and we'll get into something in here in a little bit called disregarded entities. And I'll talk about this again, but there's a term you'll hear called disregarded entity, and you can actually go Google this and look it up, which basically means that when it comes to tax time, there is no difference between the company and me personally. When it comes to legalities, taking out loans, business assets, and who owns what, the legal side of that, there is a separation. When it comes to taxes, there isn't a separation, and that's called a term called a disregarded entity. All right. Which basically means during tax time, the IRS is disregarding the LLC entity in favor for the person who owns it. Right. So when I file my taxes as an LLC, it is my taxes. It's my information. It's on my tax form. I would combine my W-2s with the Schedule Cs and everything. So it kind of depends on where you're talking from. But for me personally, since the company was already more or less established, I just kind of launched everything in that regard. And just the business, the LLC just assumed those assets. I don't know if that's technically correct, and I should have done it that way, but that's at least what I did. Does that kind of answer your question a little bit also? It might be something you just need to really dig down on yourself. But yes, my computer was bought through my business accounts. It is owned by the LLC. So if I get sued and if I have a lot of debt and a company comes after it, they can go after this computer because it was bought as an asset for the LLC. But they can't come after my car because that's a personal asset. Does that make sense? And I'll go into a little bit, especially in the tax section, I'll go into a little bit deductions, which kind of help describe assets and stuff that you buy and like how you have to use it and stuff like that. But dealt with similar things and setting up a different type of business. Gotcha. Yeah. So the types of LLCs. All right. Basically, for the most part, every company you hear about is an LLC. Okay. Now, there's a lot of different versions of LLCs, but Streamlabs is an LLC. Right? Discord is an LLC. Microsoft is an LLC. Okay. Now, they have different versions of their stuff. There's no giveaways today, bud. The software, the company, if you bought it for business reasons, then yes, technically. But you can't really, I don't know how software works, to be perfectly honest. Because you can't, like, resolve that software for debt. Because most of the time, if you buy software, you're not buying the software, you're buying a license to use the software. So you don't actually own the software, you own a license to use the software. Right? Like, that's the way games work in general. Like, I don't own, you know, whatever. Ace Combat 7. I don't own that game. I own a license to use that game. Yeah, exactly. So, types of companies. So, what I am and what I would imagine most of you would all be is a sole proprietorship. Okay, so that basically means it's one owner, right? That's the type of company you are, right? If you had a DBA, you would still be a sole proprietorship. Partnership is when you have 2 or more owners, right? Then you have something called a C corporation. Now, a C corporation is an LLC, but that's when you incorporate. Okay, so an LLC is not a corporation, but a corporation is an LLC. Okay, a C corporation, I would imagine Microsoft is a C corporation. Google is a C corporation. There's board of directors. You have stocks. They pay corporate taxes. They are, when you incorporate, you are at that point 100% completely separate from the a C corporation specifically. You are a completely separate entity from the owners of that company, right? So it files its own taxes completely separate than the owners do. Okay, and the owners are employees of that legal entity. An S corporation is a little bit more of a rare situation. It's basically, you have sort of the structure as a C corporation, but there's like a single owner, and then you do combine both of them together. I just kind of wanted to bring up the partnership, C corporations, S corporations, because those are a lot of terms you're going to see whenever you guys are like researching LLCs on your own. That there's differences. But for the most part, what I am, and what I assume most of y'all would be, is a sole proprietor. Okay. Let me make sure I don't have anything else on my notes that's different. Yeah. Oh, I did miss one thing. Some of the other terms you're going to see are something called TINs, which is, in which forms of LLC are available varies by state. Yes. And sometimes you don't, as far as I am aware, just because I live in Texas does not mean that I have to file an LLC in Texas. I could file an LLC in Delaware. I could file an LLC in Ohio. I could file an LLC in California. I could be wrong, but I don't believe you actually have to live in the state to file an LLC in that state. Okay. Different states have different laws. So Texas is generally very, very good for businesses in general. So I just went with Texas. But yeah, you might want to look that up as well. So another term you're going to see a lot with this is, and you guys have probably seen on your forms, are TIN, which is your tax identification number, which is basically the top level version of, like, when you guys file your taxes or you sign up for stuff, you use your social security numbers, right? That's how you get identified. But if you got like a 1099 from Microsoft or a company, right, it has something called an EIN, which is an employer identification number. We'll start getting into EINs and stuff like that in a little bit. Oh yeah. Every single bit of this, you should absolutely talk to a tax professional. Like, I heavily disclaim this, that I'm just dumping the knowledge that I know works, that I've used to set up all my stuff, right? So, all right. Pass-through entities. This is another term you guys are going to hear a lot when you look up LLCs. A pass-through entity essentially means that the profits that the company earns are passed through to the owner. My LLC is a sole proprietorship pass-through entity. Basically, the company, the LLC gets paid, and then I pay myself from the company. That's essentially what pass-through is. Most single-owned companies are going to be pass-through. Okay? If you guys set up an LLC, I would imagine you will be a pass-through entity. Every situation is different, but that's probably what you're going to be looking at, is something called a pass-through entity. Disregarded entity, like we talked about before, is the term used when doing your taxes, where while legally the LLC is a different entity from me, like the LLC has an EIN, and then from when it comes to taxes, I have a social security number. The owners of companies are taxed in one file. Yes. Disregarded entity basically means when I file my taxes, I'm using my social security number and I'm calculating all the business income with all my personal, if I had like a W-2 plus I was doing self-employed, it's all on one tax filing. It's not separate. Okay. I don't believe you really go separate, fully separate, unless you have like partnerships. It's like you do like a completely different type of thing. You disregard, pretend it's not there for taxes. Yeah, exactly. So that's a term you're going to see. Don't let it scare you. It basically just means when it comes, it actually makes your life simpler, right? If you have an LLC, you and the company, when it comes to filing taxes, are the same thing. That's what disregarded entity basically means, right? So you will see that term a lot. You're going to see the term pass through a lot. That's like, you'll see that freaking everywhere when you do this type of stuff. Your EINs, like your employer identification number. So you use this in place of your social security number in some places. Like a lot of times when you guys have gotten 1099s from companies, like doing streaming, they're going to have an EIN number there. That's the company's like payment information. Some states, when you require like an LLC, you are required to have an EIN. Texas is one of those states. So when I filed my LLC in the state of Texas, I had to have an EIN. And that's a separate form, that's separate charges, that's separate everything. If I were paying W-2 employees, like actually W-2s, I would have to have an EIN, right? If I'm issuing a 1099 to a contractor, I can use my EIN for that instead of my social security number. However, for the most part, whenever I sign up and I need to give a company something called an I-9, I don't know if you guys are familiar with what an I-9 form is, but basically that's when a company like Mixer or a company like Humble Bundle needs to pay you regularly. They have you fill out an I-9. Like I filled out an I-9 when I worked at BMT as a contract employer. It's basically like, hey, here's my payment information. This is who you're paying to. This is where I live. It's kind of like a general form. And they just keep it on hand. I give them my social security number in that case, not the EIN, because that's related to taxes and I'm a disregarded entity when it comes to taxes. So they pay the social security number. So it's a little bit of a weird situation with EINs versus your social security numbers. Yeah. Yeah, the LLC is disregarded. Yes, correct. All right, any questions on LLCs so far? I know a lot of you are mainly in here for the tax talk, but this is a lot of like good information. That's kind of like a lot of information. I'm trying to do a lot of this is like, hey, make sure you like do a lot of your own research. Can you please start again? No. Watch the VOD. This has been awesome. I'm glad you're liking it so far. Do you see any point in going S-Corp? I have zero knowledge whatsoever in going S-Corp. S-Corp, as far as I understand it, is like you actually have like stock and stuff like that, but there's only the one owner of the company and it's still a pass-through. Well, an LLC separates you from liability as well. Like an S-Corp, as far as I understand, it gives you the same protections as being a sole proprietor LLC, but you're structured more like a C corporation. It's sort of like a hybrid between the two. Paying graphics people, do you pay with the LLC or as you? So that's a very good question. Usually what I do in this case is if I was hiring a... So this is going to be a big disclaimer that you should absolutely talk to a tax professional on how this works, because I'll be honest with you, I sort of make a guess when it comes to this type of stuff. When I hire an artist to do a logo for me, I have them give me an invoice as they are providing a service for me. It'd be the same thing if I hired a plumber to come do, unclog my toilet, right? They're going to provide me an invoice and I pay them. Right? If I was going to hire a artist to come work for me and do a lot of stuff regularly, at that point, they're a 1099 contract employer, right? You would give them a 1099, etc., etc. If I'm doing a one-off thing, I have them invoice me and I pay an invoice just like I would if I'm buying something online, right? If I go to nerdordie.com and I want to buy streamer overlays, I'm paying that website a service. That's how I treat artists. I have them invoice me. I'm not sure. That chef might actually be able to answer that one a little bit better for me. I know he's not like an actual tax professional, but I believe that that's sort of... That chef is like a CPA though, but he's not a tax professional. Yeah. Is that a correct statement then, chef? Like, I can basically have an artist invoice me and they're not technically a contract employer if I'm paying them for that sort of work, right? They're their own entity. I'm my own entity. They charged me for a service they performed. I'm not paying them for a regular service at my place of work. You can't say that's a correct statement, but you can say that's how you do it. Got it. Understood. Do your own research with that one for sure. Talk to somebody about that one for sure. That's how I handle that situation. Okay. Any other questions before we go on? We're almost done with the LLC part. Yeah, we're getting close to the LLC part. There's like 2 more slides on this. Yeah. Okay. The protections with a little limited liability company. So, if I take out a loan, like I said this before, if I take out a loan through the business, I need to buy something, right? Like something expensive. I buy a company car, something like that, and the company goes out of business. There's certain cases I'll get into with the corporate veil. But for the most part, the company goes out of business or something like that, and I have to file bankruptcy with the company. That car company can't then come after my personal assets for it, right? It becomes difficult for prosecutors to come after you for personal lawsuits. It's not impossible. It's also not impossible for them to come after you after those debts, and that's where we get into this whole corporate veil thing. But for the most part, the LLCs provide those protections for you. So what is the corporate veil? Okay, so this is something that you can actually Google. You can go Google the term corporate veil. The corporate veil is a doctrine that it's this idea that there is a separation between what the business owns and then what you personally own. And it's a pretty easy thing to understand in like a big corporation like Microsoft, right? Like the computers, the owner of Microsoft or the CEOs of Microsoft, you know, that's not their personal assets, that's the company assets. It's a little bit different when it comes to me being a streamer and I have a pass-through disregarded entity, right? And I own a Nintendo Switch. Is that the company's or is it mine? Is my computer or my lights, right? Is that the company stuff or is that my stuff? So there's this idea of the corporate veil. And it's the concept of there's a clear separation between business assets and personal assets. And it's something that as a sole proprietor, you are required or you should maintain. Because if a legal professional, a prosecutor, can pierce the corporate veil, which is a term that is used in this, then they can come after your personal assets. Right? So just because I have an LLC does not mean that I am completely 100% immune from having my personal assets taken from me. If a legal prosecutor pierces the corporate veil, they can come after personal assets. So what does it mean to pierce the corporate veil? That basically means that they can draw direct lines between your personal stuff and your business stuff are the same things. Yeah, limited liability. Exactly. So ways that the corporate veils can be pierced are if let's say I have my personal checking account and I'm paying for streaming equipment from that. I'm paying for my pack strips from all of that type of stuff. As a sole proprietor, non-LLC, there's really not a problem with that at all. That's just kind of like, okay, that's normal business operating procedure. I'm pretty sure that's how most of you guys operate right now, right? When you start getting an LLC, if you want to maintain those protections, you have to show clear separation between that stuff. So I have a business checking account and a business savings account and a business credit card that I use for business reasons only. My personal stuff is used for personal. My business stuff is used for business. If I was to mix and meld this stuff, then a prosecutor can come in and say, hey, look, you know, that new mattress that he bought is coming from the same accountants using the same credit card that he bought this business computer. So therefore, what's the difference between the two? Like, we can't separate your business and your personal assets. Therefore, this corporate veil has been pierced, and you can lose that protection that an LLC is designed to give you. However, if you maintain an organized separation of assets properly, having separate checking accounts, financial accounts, having streaming is a low, sure, but it's something to keep in mind, right? If you do set up an LLC, my suggestion is to get your stuff organized and separated. Pay yourself personally through your business account. It doesn't mean you can't get money personally. What happens is, like, whenever BMT pays me once a month, they pay, it goes into my business checking account. I then take a chunk of that, set it away for taxes. I then take whatever I want and I then withdraw it over to my personal account, and I have essentially paid myself from the company. But then all other business stuff goes through those other accounts, right? There are other ways that the corporate veil can be pierced. If I have reckless business practices, if a prosecutor can come in and say, like, hey, this guy is personally, he set up this LLC, he took out $1 million in loans, and then he bankrupted on purpose, right? If they show that, you can't just do that. I do, because I'm a contract employer, Codex, with Balanced Media Technology. I'm not a formal W-2 with them, right? So they don't withhold any taxes from me or anything like that. They pay the LLC and I pay myself from that. Yeah. So if I take out an LLC and I go get $1 million in loans, right, and then I purposely just don't pay it off, guess what? You think that, oh, it's the business, that's only one liable. No, they'll come after your personal assets for that, because it would be easy for a prosecutor in that case to go like, hey, he obviously did this for personal gain, therefore this is his personal assets. They're one and the same. So obviously, if that wasn't the case, then anybody could just set up an LLC for a few $100, go take out $1 million loan if you could get approved for it. Obviously, there's that part, but if you got approved for it, then just be like, oh, the company went out of business. Can't do that. Yeah, but the main way to avoid that is you got to show clear separation of your personal and business assets, right? Yeah, most small businesses have owners as liable for the debts of the company. Yeah. But if I, took out a loan and I was struggling for years and I could show that there was legitimate effort, then it's a lot harder for them to come after your personal assets if you just had, the company just went under for business reasons. Oh, sure. I completely understand that. I'm just talking about, like, in general, right? Like, if you're reckless business practice stuff, right? So definitely something you want to look up. Yeah, reckless business practices with borrowing money it can't return. Owner borrows money it knows it can't pay back. Yeah. If someone who did business with a company is left with unpaid bills. So if I did this business and I hired a contractor to go build a building for me, and then I just noped the hell out because I didn't want to pay it, and now I have this shiny new building, that's sort of the same concept. Like, that's it's reckless business practices, and obviously that'd be up to, like, legal prosecutors to prove all that type of stuff. So when it comes to filing an LLC, by the way, I should be dropping a lot of these links here, and I haven't been, but this is information on the corporate veil right there. Nolo.com is a really good resource for a lot of this information. I had like all these links here ready to, like, paste for you guys so, like, save it. This is IRS's talking about small business and self-employed as an LLC. That's an IRS thing. I need to talk about a registered agent. We're almost done with LLCs, and we're going to get into taxes. I told you LLCs is only going to be like 30-40 minutes. Yeah, that's like talking about the different company types: S corps, partnerships, sole proprietors, yada 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 yada. Okay, filing. This is the last section. We're going to talk about filing an LLC. Like, what do you do? Where do you go? How do you actually set one of these things up? That is different for every state, right? Every state is different. You are not filing with the United States government. You are filing with your state, all right? When you incorporate, I believe then you start dealing with a lot of federal stuff, but I don't know for sure. But at least with filing a generic LLC, that is done with your state. They all have different prices. They all have different processes. You just got to look it up. For the most part, you essentially get the same thing conceptually in the end, but all that. I set up my LLC through something called LegalZoom, which a lot of you may have heard. Pricey, but, you know, they know what they're doing, in my opinion. You have something called a registered agent. In the state of Texas, you are required to have a registered agent. Other states, you're probably not, but at least in Texas, you are. It's cheaper than getting it wrong. Yeah, exactly. Yeah. LegalZoom helped me with my specific state requirements. They are my registered agent, which I'll talk about in a second. They also set up all the EINs, which in my state it's required. Your state, it may not be required to have an EIN, but they helped me with the filing of the SS. I think it's called like an SS4 is what the EIN form is in the state of Texas. And then everything related to my state specifics, LegalZoom handled, and they should be able to handle with all the other states. There are other websites as well that you can use for this. You know, just do your own research in that regard. So registered agent, basically what that means is that because I have a company that is registered with the state, this company information is public. As a streamer, that's worrisome because I don't want people knowing my address. I don't want people knowing, you know, filing personal information, etc., etc., etc. Having a registered agent helps me not display that public information, and I can actually show you. So my company is called Hacky Things LLC. So if we go to Google and you look up Hacky Things LLC, you're going to find information on this. All right, Hacky Things LLC. Bam, Hacky Things LLC in Austin, Texas. I don't live in Austin, but it says I live in Austin. So if we go here, what are some of the things that you guys see about this page? There's an address. There's a registered agent address, and there's a principal address. This is public information. Anybody can look up if they know the name of your LLC. The cool part is, this is not my address. I do not live in Austin. I live in Dallas. This is the registered agent. This is LegalZoom's address. And if we click on this address, what you're going to find is that address has a lot of LLCs. So having this as a registered agent protects me from people being able to tie my company name to a personal address of mine, which would be the principal address. Basically, the reason this is public, and this has to be public, at least in the state of Texas, is because if people were to sue Hacky Things LLC, they have to have public information on where to send a subpoena, legal notices, whatever. That's a requirement, at least in the state of Texas. And I'm pretty sure it would probably be a requirement in most states. And LegalZoom represents that agent to receive those notices. So if I were to get sued, or if I had this legal notice or whatever coming in, it gets sent to LegalZoom. LegalZoom then contacts me. Right? In a lot of states, you can become your own registered agent, but then you have to give it an address. I pay yearly for LegalZoom to be a registered agent. It costs me a few $100s a year. Yes. Filing the LLC doesn't require a yearly cost for me personally in the state of Texas, but having a registered agent does. I'm paying LegalZoom to be that front for me. So that's something to consider whenever you set up an LLC. If you have a public thing like being a streamer, right? You don't want people really to know your address. At least I don't personally. But this is you have to start worrying about your public information, and your state could be different. For all I know, some other state, there's no way for you to hide your personal information. I don't know. At least in the state of Texas, I can do this. None of this information can tie back to me personally, right? Nobody can use this information and look up me personally, my address, my stuff, right? As long as I keep the registered agent active. Okay? All right. That is LLCs. That is LLCs. Any questions on LLCs? We're about to get into taxes. I know a lot of people were interested in the tax stuff. That took 42 minutes. That ain't too bad. Taxes. I know Slap T Love too. I know he was here for taxes. I don't know if he's still around or not. You are. All right. All right. Cool. 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 Oh, yeah. Hold on. I got some other links here. Why you need a registered agent. A lot of this information that I source very specific information from. There's LegalZoom. Why you should get a registered agent. Yada, yada, yada. And then NOLO, if you guys are looking for your state specifics on LLCs, NOLO actually talks about it. Like, this is the steps you do, yada, yada, yada. File an article. Hey, what state do you need to go to? So if we go to Texas, look, they give you all this information about what it takes for Texas to file an LLC. Right? Was Puerto Rico even in there? I don't know what it takes to file an LLC in Puerto Rico. I'm sorry. But if we were looking at Michigan, here's what Michigan requires to form an LLC. It's great information, right? Thank you for the 100K, man. I do appreciate that. And Locked Sleet, thank you for the 5K. Cool deal. It does take money. Yes, I think Texas was like $300 to file with the state. 350 something. I don't know. I did it last year. I could look it up. Every state's different. All right. Taxes. What is this saying? There's only two things in life you have to do: die and pay taxes. Yeah. All right. To understand, I don't know everybody's level with how much you understand how filing your taxes works. I'm only going to be talking about federal taxes. Texas does not have state taxes for income at all. I have zero clue state tax. That's your own thing. Look it up. There could be a lot of stuff when it comes to self-employment. Texas, I go to that section in TurboTax and it's like, Texas doesn't do state taxes, and it just leaves. Good job. You don't owe any money to the state of Texas for that. I don't know what everybody's understanding of taxes in general are when it comes to tax brackets, what type of tax system we have, Schedule C. So I'm really going to kind of start at the beginning of this because you guys need to have sort of a foundation, and there's a lot of people who have misinformation about how much they're taxed, and they don't think about it in the correct sense. I actually saw a Reddit post where somebody in personal finance was venting because his friend refused like a $2,000 bonus because it was going to put him into the next tax bracket, which shows that he has a very misunderstanding of all that. Yeah. So I'm going to explain how tax brackets work. I'm going to explain what refunds, like why do you get a refund? You know, a lot of times when you file out your taxes, why is the government sending me money? What is a Schedule C? That's going to be a term, especially for all you self-employed people. You'll be at the... Okay, that's cool. Yeah. Counting 101. Yeah, exactly. There's like very few situations where accepting more money is actually worse for you. About 99% case, 99.9% case. Take the bonus. Like, trust me. Has state tax and a country tax for income. Yeah. I'm going to be talking about federal taxes. United States IRS.gov taxes, not anything related to states. Oh, man. Yeah. Okay. So we're going to go over some basic terms. Gross income versus net income. That chef knows all about this. Hopefully you guys know what this is. The term gross income means this is all the income you have received prior to any of it be taken out for taxes, deductions, and credits. It is the total amount of money. If I worked for a company and I get paid $100,000 a year, that is my gross income. As we all know, if I worked for a company and got paid $100,000 a year as a W-2 employee, I don't actually get $100,000 a year because they withhold taxes, right? So what you get as your takeaway after all of your taxes are done, your deductions and credits is called your net income. So gross income is the total amount a company is giving you. Net income is actually what you've received. You agree with those statements, Chef? No. Am I wrong? Please tell me. You can agree, but net income is what fishermen get. Yeah. Net income is different after all expenses. Okay, well, there you go. Okay. I thought that included your taxes taken out of it as well. But I guess net income is what you get taxed on, right? In addition, you must file a tax return, only 1040, reporting worldwide income. With the exclusion of Puerto Rico, if you're not a bona fide resident of Puerto Rico, generally you must file both a Puerto Rico tax return as well as a U.S. tax return. Tax withholding does not equal expense. Okay, then that is incorrect. That is incorrect. I should have looked that up better. I more or less just typed it assuming, but hold on. We'll fix this. All income earned after expenses. See, this is why I had that disclaimer down there. Doing it live. Okay. All right, so there's your, that's what these terms mean here. Okay. Tax brackets. I got tax brackets on the next page. Yeah, there's the disclaimer. Do your own research. Tax brackets are the way that we get our income tax taxed, right? You may have heard tax brackets. You may hear about, do we just hit tier 4? There you go. Everybody do exclamation point win one of the 4 toasters for tier 4. Technical thing, but if you get 12K refund, use them withholding expenses wrong. Okay, got it. That makes sense. That makes sense. Yeah. Net income is what you get taxed on. Yeah, it makes more sense. Everybody do exclamation point win if you want to win one of the toasters. All right. A lot of people have a misunderstanding about how tax brackets work. Okay, and what they're actually used for. We're also going to talk about refunds. Why do you get a refund? Because you were taxed incorrectly and the government took more money than what it should. And so here's your money back, right? A lot of people will tell you that if you are having to owe, you want to try to not owe any money and not get any money back. Technically, that's what a lot of people will say, because if you get money back, you've essentially given the government like an interest-free loan that you don't earn any money back on, when you could have just kept that money before paying it in general. Yeah. But for the vast majority, people get a tax return, especially if you're a standard W-2 employee, and I'll explain typically why that happens. Now, you are allowed to, at least, yeah, you are allowed to go to your company and say, I need to change my tax withholdings. All right, so if they're taxing you incorrectly because you're now getting refunds or you're owing money at the end of the year, you can go and change it. They're required by law to have you go and change it. Okay? Okay, this is a lot of information. This is the 2018 tax returns, and I'm not going to go over this, and this, but this is typically what you're going to find whenever you go look up tax returns. And then there are these 4 different sections. You have single, which is what I am. I am not married. I do not have any kids, right? Head of household. I have kids, but not married. I am married, you know, filing jointly. That means, you know, me and my significant other are filing the same tax return, right? So there's different tax brackets for that. Married, but I'm filing separately, as you can see, is similar to single, but it's not quite the same. It sort of combines the concepts of a lot of these, right? Is going to die with how loose you are in the technical accounting terms. Yeah, I know, but I'm kind of giving like breakdowns of this stuff, right? I'm not trying to be dead on specific here. I'm trying to give the basics, the gist of it. Before you file, read the definitions, follow the worksheets, because I am super simplifying. Yes. If you use something like TurboTax, you go to CPA, they do a lot of the stuff for you, but I want you to get a basic understanding. I'm not trying to get these people like a certified CPA degree here. I'm going to ban you from the chat, Chef. All right. Whenever you get money, love how super simplified it is. Makes it, yeah, I'm just trying to, I am essentially giving people I want to give a super simplified explanation of this. I'm trying to give you guys the basics of these ideas. Yes. If I get paid, let's just say for the sake of example here, easy math, I get paid $100,000, right? A lot, and I'm single, right? So I'm single, I get paid $100,000. A lot of people go, oh, I'm in the 24% tax bracket, therefore I get charged 24% for income taxes for the entire thing. It's not correct. That's not what that means. Each level of your income is taxed at that rate. So if I have if I get paid $100,000, right? The first $9,525 is taxed at 10%. Then the next, whatever 38,700 minus 956 is, that's taxed at 12% and added on top to the 10% rate. If I then go up to here and the range is between 38,701, that's taxed at 22% and then added on top of everything else, right? So this is what I was saying before. It's kind of like if you are making $82,500 and somebody wants to give you a $100 bonus, you may go, well, then all of my $82,600 is going to be taxed at 24%. No. You would be taxed at the 22% for this range, and then that $100 is taxed at the 24%. Right? So this is how tax brackets work, and you need to kind of have this understanding with this. And this is income taxes. In the United States, there are the three primary taxes that we pay, more if you're like a big corporation. But for your income, right? We pay Social Security, we pay Medicare, we pay income taxes. There's your three. This is income taxes. Medicare and Social Security are different. They don't follow this. So you can't just use this to calculate how much you're going to pay the government, because you also have to take into account Social Security. You have to take account Medicare that you owe. So simply income. Yeah? Everybody now understand how tax brackets work? And obviously there's different brackets for different people. They change this every year, whatever Congress decides. If you made less than $9,525, you wouldn't actually pay anything because you're below the standard deduction. But you don't even have to file. But yeah, that's essentially the tax bracket stuff. Okay. That's a W-2. Yeah, and no, this is like your total. So this is combined income, everything, right? This isn't just like, you don't just look at this and go, oh, well, this W-2. It's when you combine everything total. So if you get a W-2 and a 1099 and all this, this is the total income that you have received, right? I actually have an IRS, I believe. I have an IRS link somewhere that basically says, I'm scrolling down to my notes here when I talk about the standard deduction versus itemized deductions. I don't know where that section went. Deductions, itemized, standard. Oh, I have to go look it up, but I'm pretty sure I saw an article that basically stated if you have a total income below the standard deduction, you don't even have to file a return. I saw that on an irs.gov website. I'll have to go look it up, but I'll have to file it. But yes, this is like your total income. So what are some of the real common reasons that people get a refund? What a lot of companies do, if I work for just one company and I get paid $100,000 at this company and they're like as a W-2, that's what you should always file because retirement tax return can be audited. It can always be audited if you never file. Sure. I get that. File and just say you made zero. I understand. Yeah, I'm going to get into 1099s. A few things down. Actually, after we get down into a lot of this other stuff. So some of the reasons that people get a tax refund and the reasons that you have paid more is because the standard way that companies tax you is they, like, if it's just by default, at least the companies I've worked at, and you don't make a specific withholding claim and you just go with the default, if they're paying you $100,000, they're just going to take away this 24%. They're going to take 24% right off the top, and they're going to withhold that and send it over to the federal government. So then you file your taxes and you go, well, by the way, whenever you combine, like I paid, the first $9,500 at 10%, I paid the next $29,000 at 12%, I paid yada, yada, yada. When you combine all that up, I believe it's called the effective tax rate, which is like, once you combined all of your different ranges into one thing, that percentage is your effective tax rate. So a lot of times when you go work at a company, they'll just take off that top level amount and your effective tax rate was actually lower than that, but they were charging you more. Total tax by taxable income. Okay, well, there you go. Your total tax divided by your taxable income. It's your effective tax rate. Yeah. Same thing, just simplified. Yeah, no, that's good. That's good. That's how much basically you owed in taxes. So it's like 21.2537%. All right, that's how much I paid or whatever in taxes that year. So this is really good information. A lot of people have like misconceptions about how this works, but my effective tax rate could be lower than what my company is charging me, or my effective tax rate could be higher than what the company charged me. Withheld is the correct term. They're not charging me, they're sending it up to the government. Or it could be more, and then I have to owe, right? So I'll actually tell you a story. My mom has several different sources of income. And for a couple of years, she was always having to owe on her taxes, like every single year. And that was because she earned $5,000 from over here, $10,000 from over here, $20,000 from over here, had this pension, this retirement, this thing, this, that, whatever. And it was a bunch of saturated income. Well, every one of those places was withholding tax, but they don't know how much you're making in total if they just estimated it off their own. So if you get paid $5,000, they may only withhold 10% from that one. And if this company's paying you $50,000, they may only withhold, 18 to 20% or whatever. But when you combine everything together, you realize, hey, well, that one company that only held 10% should have actually probably withheld more, but they didn't know I was making another $70,000 from another location, right? So in her situation, she had so many different places of income that because they were kind of in this default mode of withholding your taxes based upon what they were paying you, not what you were making as a person, she ended up having to owe a lot of years until we figured that out and went, oh, that was the case. And then she told them, hey, withhold more from this because I'm having to owe on taxes. And now she doesn't really owe. We've kind of helped get it narrowed down. Everybody understand the basics of tax brackets now? Good. Any questions? Yes. All right. It's like good basic information to have. And now we're going to talk about self-employment and what that means. So, like I said before, there are three main types of taxes that we pay as self-employed, or if I'm a W-2 working at McDonald's or a company, right? It's income tax, which is what those tax brackets are. Social Security tax, which we all know what Social Security is, right? That's when we pay money that then older people, as they get older, they take out the money and they're able to live on that, right? So the younger pay for the older, right? Same thing with Medicare. You're helping to pay insurance for older people, right? Because they paid in whenever they were younger. That's the concept. Obviously, it doesn't work as well as we would hope, but it may die one day. Who knows? But that's at least what you pay for. So you get paid. You get paid at that rate. Actually, did I paste the tax bracket thing? Did I paste that link to tax brackets? Maybe I didn't. Let me paste it again. There's information. You must write a message. I did write a message. What do you mean you must? Hi? I couldn't just type the link. It was like, you must type a message. Okay, that was weird. Never had that before. All right. Okay, here's another link for, this is actually an IRS link right here. Yeah, this is what we're going to talk about right now. So you have these things called FICA, which I'm pretty sure Chef knows a lot more about this, but essentially that's the Federal Insurance Contributions Act, which was some act sometime, long time ago, 90s, 80s, 70s, whenever it was made. But it's basically the law that was in place on how your Social Security and your Medicare taxes get handled when you are a W-2 employee for a company, right? So if I worked for Microsoft as a W-2 employee, they are under the FICA the FICA category, right? Federal Insurance Contributions Act. The company, and this what comes specifically was your Social Security and Medicare, right? We're not talking about income tax. We're talking about Social Security and Medicare. The company pays half of those totals. You pay the other half. So if you make $100,000, I believe that FICA and everything together is, or Social Security and Medicare is like 15.3% total, right? They deduct this from your paycheck. You'll see it on your pay stubs in a lot of cases, right? Maybe if you just do, I don't know, maybe. Yeah, 15.3% total, right? So if you're as a W-2 employee under FICA, the company is going to pay half of that, 7 point, whatever half of 15.3 is. And then you pay the other half. SECA, which is self-employment, 7.15. There you go. That's how much you pay Social Security and Medicare out of your paycheck. Just off the top. Actually, Social Security goes up to like $128,000. Anything past $128,400, you no longer owe on. You only pay 12.4% up to 12. All right, actually half of that, 6.2%. Self-employment, obviously a company is not paying you, right? They're not paying their payroll taxes or whatever, where all this stuff comes from. They are paying, you are getting it yourself. The government still wants that 15.3%. Right? They don't care. They just want their 15.3% from everybody. But as a self-employment, you're kind of responsible for all of that. So if I get paid $100,000 as a W-2 employee, I get more takeaway than I do if I get paid $100,000 as a contract employer, because now I am owing all 15.3% versus the 7.15% I would owe under FICA, because the company is paying the other half. However, the benefit that you get is that under SECA, it is deducted from your main income tax. So what you pay for Social Security and Medicare is then taken away before your income tax is calculated. So you kind of get that, you kind of get something that kind of flows back the other way with that. Right? Makes sense? Good? Everybody kind of understand that? That's sort of like the basics. Now we're going to get into more of the specifics of this. So when you do your taxes, and if you looked at the tax brackets and you go do an income tax calculator, you go, why am I having to pay the government for? Why does TurboTax say I owe more than what the tax calculator told me? It's probably because it just did income tax and not the other ones. Yeah, 7.65. I don't know where 7.15 came from. That chef, numbers are amazing. He didn't even do the math right. God. All right. So this is what I said, that you must file a return if you made $12,000 or more in a year. Like the IRS, I know, I'm going to go Google this because I'm about 99% certain when I was writing this, I saw that on a website. When must I file a tax return? Do I need to file a tax return? Filing says for a basic income, return your gross income. Yeah, I'd have to go find it again. You should file one, like Chef said, not filing one would give them more of a reason to audit you than just filing one saying that you made nothing. Okay, I guess I saw it on this Intuit page right here. So I could paste that link. So this is TurboTax Intuit, right? You know, they're not the IRS, but, you know, they are a tax professional company. Your income that is equal to less than the standard deduction is not taxable. The IRS does not require you to file a return in years your income does not exceed that sum. In 2018, the standard deduction was $12,000. So if you made less than $12,000 total dollars from every source of income, the IRS does not require you to file one. As Chef said, if you're kind of going in, some years you're filing, some years you're not, it would probably be better to file and just say that you owe nothing. Because if they see a missing return one year, they could go, oh, well, you should, you should definitely check this out. Why are you not filing all of a sudden? But if you file and say, well, it's because I made under $12,000, understand deduction, I owe nothing, then you're probably less likely to get audited. But, you know, it's whatever. You can get it audited at any time. What's up, Law? Okay, you owe taxes on any activity you receive $400 or more from in that year. All right, so I'm going to really preface this with a disclaimer that this is my understanding of what this means. Okay? Yeah, like when you do your FAFSA and stuff like that. Yeah, especially if you're going to college, right? Or you want to go to college and you want to do financial aid. Yeah, they want your tax returns. So even if you made under $12,000 and stuff. So I'm heavily disclaimering here. This is my understanding of how this functions. Do your own research. When it comes to an activity that I'm being taxed for is the total amount of money that I'm receiving for doing something. It's not how much money that an entity has paid me. So you'll see a lot of stuff that says, oh, you don't owe any taxes on any income you received under $400. You do if the combined incomes for all those activities is more than $400. So basically, my understanding of this is, if I decided to go mow my neighbor's lawn, and that's something that I don't do regularly, I just decided to do it this one time, and I got paid $350 to go mow my neighbor's lawn, then I don't owe taxes on that. Okay? However, must be a big lawn. Yes, they have 20 acres, you know, and I have a tractor that I just have, and I'm just going to go mow the lawn. It can pay me $350. Now, if I start several times of the year mowing that same neighbor's lawn and I'm doing it on a regular basis, that becomes a regular activity. I would have to start being taxed on it, technically. Okay? But if it's just like, I just did this one thing, if it's under $400 for a service you're providing, and it's not something you do regularly, you don't owe taxes on it. But if I mow the neighbor's lawn and it's $401, bam. You might as well just told them to pay you $399 because you would probably lose more if you just told them to pay $400. Those would be some of the cases where accepting more money would probably be worse. At a certain threshold, it's like, well, you know, it's either $399 or $425. Either way, that's my next jump. So would I have to pay a $1099 for $600 income? Yeah, I'm gonna explain a little bit more than that. So, however, in a lot of the streaming cases, like Jay-Stron said, I've earned $50 from Streamlabs merch. I've earned $200 from Mixer. I earned $500 from Humble Bundle or whatever, right? You're receiving that money as an income for a separate activity. So you're kind of looking at the global picture. So just because I received $100 or $50 from merch, it's below that $400 threshold, but that's because of my streaming income. Therefore, that $50 is still thrown into that, and it would be taxed. So it's not like every donation I get under $400 is not taxed. It absolutely is in the United States. If I get a $1 donation, I owe taxes on it. If my total income for that activity exceeds $400, right? So a lot of people think that, oh, well, I did streaming and I got this $100 1099 MASC from this company. I don't owe taxes because under the no, you do as long as you've made more than $400 from that single activity. Then you do. If you mow 10 neighbors' lawns once a week and they each pay you $40, you have to pay taxes. Yes, because then it becomes a regular activity that you were doing. Yes. All right. Does that kind of answer your question, Jay? Hopefully. Or does anybody have any questions so far? Make sure I got all my information here. All right. Now we're going to talk about filing and paying. This is probably where a lot of people are kind of paying attention, I hope. T-Butt and a few others. All right. When you have self-employed income, you receive 1099s, you're doing the streaming, you're doing a lot of this, you are filling out something called a Schedule C. If you're not familiar with it, you need to start getting familiar with it. This is the form that you are providing with your 1040. So when I file taxes in general, you file a 1040, right? There's also a 1040 EZ, but that's like, if you make below a certain amount, you file a 1040 EZ, and it's like very, very basic information. Most people are probably going to be filing 1040s if you make more than like $25,000 in a year. I or somewhere in that range. I don't know what it is. There's a difference between 1040 EZ and a 1040. I file a 1040. And I have a Schedule C. A Schedule C is my profit and loss from self-employment. Okay? This is like where if I buy a computer game for a stream, I put it, it's all calculated into that Schedule C. If I get a donation from somebody, if Lol donates $10 to me, that is now my profit on a Schedule C, right? When you do a W-2, that goes into a different section of your taxes, right? Now, in the end, the Schedule C goes on your 1040. Your W-2s are calculated, and they go in a different section of your 1040, and then the 1040 sums up everything together and says, this is how much you owe, right? All your income that you are receiving for streaming, like I said, if you make more than $400, you are taxed on. Every little donation, every merch item you sell that you get a profit from, Mixer pays you for your 1 sub a month. As long as you're making more than $400 in that, you have to start filing Schedule Cs and stuff like that. Okay? Another really big myth is that you are required to pay quarterly. A lot of people think that they can just do a lot of this stuff throughout the year and then just file your taxes and just owe at the end of the year. You will get penalized for not paying your taxes. And TurboTax will actually calculate all that for you if you use something like TurboTax. All right, or any tax professional will calculate that. Like, oh, you owe, I think it's like, if you owe more than $1,000, you are then accruing penalties on that. Now, I don't know exactly what that specific penalty is. I think like 1 year I owed $1,400 and I had like $27 penalty or something like that. It was like my 2017 or something like that because I owed $1,400. So, but if you're having to pay like $10,000 and you owe all that at the end of the year, yeah, you're gonna be paying a penalty above that. A lot of people don't realize that, and it's a really big myth that it's when you file taxes that you do this. Now, if you're a W-2 employee, this is all done for you through the company that you're working for, right? That's their payroll taxes that they pay, right? This is all done for you. You don't even have to think about it. But if you are self-employed, you have to pay quarterly or you will get penalized. And the more money you owe, the more you'll get penalized. So, to pay quarterly, here's a very, very important website that I use. There's 2 different websites. You can go in and you can do like a one-time payment for quarterly taxes on some iOS website, or you can do what I do, and it's called EFTPS, which is the Electronic Federal Tax Payment System, because they like their acronyms. Wondering what's the 1099 stream lives? That's just, it's just miscellaneous income. I'm going to go into TurboTax in a little bit too, Jstron, and kind of like show off some stuff. Yeah, absolutely, Knight. Go ahead. I think you're a regular. If you're not a regular, you need to be a regular. Okay, you are. Good. Quarterly tax payments. Yep. So you owe, like, I actually have all the dates here on my notes. Who should pay quarterly taxes? Yeah. If you estimate your tax due is $1,000 or more, good point. 90% of your current year's tax liability, 9% of your current year's tax liability. 100% of your year's previous tax liability, 100%. Not quite sure what they mean by that. Who shouldn't pay? If you don't owe any taxes, you don't have to pay. Your prior tax period covered a 12-month. Oh, yeah. When should you pay? April 15th, June 15th, September 15th. I'm going to show you a tool that helps you manage all this stuff. It's glorious. But EFTPS is a website that I go to, and that's where I pay my taxes, right? You have to go there. You sign up for it. They send you something in the mail with a PIN, and I log on with the PIN. I attach my bank accounts, and I pay my taxes, and they withdraw it from my account, and I do this once a quarter. Okay, so whenever I get all my money, I use something called QuickBooks Self-Employed, which I'm actually going to show off later. It's actually toward the end. I'll show this off. You can... It actually helps you gauge. This is how much you're estimating on owing. Tax payment is coming up. I can do it all through QuickBooks Self-Employed. If you are going to owe more than $1,000 for that quarter in taxes, you are required to pay quarterly. Yes. Actually, I don't know if that's $1,000 in the year you have to pay quarterly. Actually, it might be $1,000 in a year. Yeah, in the year. If you owe more than if you're going to owe more than $1,000 in taxes in a year, which basically means that if after all deductions you got charged at 10%, and if you had $10,000 that you were taxed on, then you're probably going to have to pay quarterly. Yeah, for the year. So I'd pay, if it was evenly spread out, and I got that, if I owed $1,000 the entire year and it was evenly spread out, it'd be $250 by this date, $250 by this date, $250 to this way, $250 by this date. $250, right? EFTPS is the government website to use to pay that on a regular basis. Like I said, there is another website that you can do like a one-off transaction, but if you want to keep track of your payment histories, all that stuff like that, I recommend EFTPS. If you want to use QuickBooks Self-Employed to manage all this, which I'll get into later, got to use EFTPS for that because that's what they want you to put in. But that's pretty much that. We're going to start going into deductions and stuff like that too. A little bit of a rare situation, but if you are paying if you start paying W-2 employees, you need to go do your own research because I have no clue how that works. I've never paid a W-2 employee like a salary or hourly wage or anything like that. But I have done contract employers. Johnny, for instance, is a contract employer of Hacky Things LLC. I pay him regularly. He gets a share of the money that the stream earns through Mixer specifically. So whenever Mixer gives me payments, I give Johnny a percentage of that. And I make that as a regular payment once a month. He files an invoice with me. And he does a lot of stuff for the stream. So I'm making sure he gets that as well. And that was made possible mainly because of the Sparks patron and stuff. And just how well you guys have been doing with donations and everything too. So he is a wizard. I could not have done any of this level of stuff without him. But contract employers, if you pay somebody regularly, right? If they are a U.S. person, right? They live in the United States. You are required to give them an MISC, right? Which is what you guys get from a lot of different locations. Oh, I have to give you a 1099 MISC because you did work for me, right? If they make more than $400. There's certain cases where you don't actually have to get MISCs from companies like Mixer. Technically, I think for like all of our subs and stuff like that, we don't get 1099s from them, but I do for the direct purchases. Like, I don't know, it's weird. If you have a contract employer, somebody who's working for you as a contractor, you give them a 1099. Also, just as a quick note, if you are going to get contract employers, if they are somebody living in the United States, if they are a U.S. citizen living in the United States, I would say yes, J-Stron. Yes. That was your direct purchase stuff. I don't think we will get a 1099 from them. Yeah, I'll show you all that when we get to Turbo Access stuff. I'll definitely show you all that. Hey, Psychotic, thank you for the host. If you were going to have contract employers, like whenever I have Johnny, right? If they are a U.S. citizen living in the United States, you, as the person hiring them, needs to have an I-9 on file for that person, okay? So BMT, my company that I'm a contract employer for, I fill out every year an I-9 with basic information. Here's my social security number. Here's the name of my LLC. Here's where my address is, yada, yada, yada. Yes, they can. Yes, but I don't believe in mixed situations that they are required for the type of, because we're not contract employers, right? We're partners. So obviously Microsoft is going to know what they're doing, I would assume. So if they're not giving you a 1099 on time, most likely it's because they don't have to give you a 1099. Just because you don't receive a 1099 does not mean you don't owe taxes on it. You have to final tonight? Wait, what? No, you're not to file tonight. You have to file by April 15th. April 15th is the deadline for filing your yearly taxes. Or the next business day thereafter. Right? I don't know. That might be a unique situation for you. I'm not sure. Okay, then that's interesting. I don't know. You're gonna have to talk to them about that. I know nothing about that. Now Johnny, on the other hand, just so you guys know, because I had to do this research all myself. Since Johnny is a contract employer, but he does not live in the United States and he's not a U.S. citizen. Therefore, he can't even fill out an I-9. He doesn't have the information. He doesn't have a social security number. He doesn't have a United States address and live in a state. So there is a W-8 form that Johnny did fill out for me that I have to get updated once every 3 years. And it's basically the foreign contractor and stuff like that. What's kind of interesting and what we found out is that while if Johnny lived in the United States and was a United States citizen, I would have to have an I-9 from him every year to keep on file, and then I would have to issue him 1099 MISCs if he made more than $400. Because Johnny is not a U.S. citizen, he's not working in the United States, he's not a U.S. citizen living outside the United States, he is simply foreign to the U.S. and living in a country outside the U.S., not doing any work within the United States at all, I don't have to send him anything. But I have to keep this W-8 on file. If I get audited and I'm showing I'm paying a contract employer, I go, I got a W-8 form. This is him basically signing, stating he does not have any association as a citizen or residing in the United States. Right? I know this is probably above and beyond what a lot of you are wanting, but if you want to get into hiring a moderator, if you want to get into hiring a production assistant, somebody, you need to know this. Okay? What do you need if you contract a U.S. citizen who lives in the United States? Okay, there's actually something called like a 1042, I believe. It's like a 1042S, which is like those cases. I believe that's what it is. If it's like a U.S. citizen living in the United States, or if it's like a forest citizen having a visa but working in the U.S., there's like different forms for all that. Is it a 1042S? Haha. Foreign person's U.S. source of income subject. Okay, this would be a foreign person, but they like live and work in the United States, like they have a visa. That's a 1042S. But yeah, like U.S. person, contracts, employer, living outside of U.S. Yeah, it's like a different. Yeah, you're gonna have to really do your own research on that. There's like those main edge cases and stuff regarding that. But yeah, there is situations that handle what you're talking about, Cubby. Right? But I only have to give a 1099 to somebody if I don't have to give a 1099 to Johnny. But if he was United States citizen or living in the United States or something like that, then I would have to give something. 1042 or whatever that is. Okay. Deductions. This is wildly important. This is some of the big important information that I know a lot of you are worried about. How do you start taking off money that you owe? All right, so there are two types of deductions whenever you are self-employed. You have the standard deduction, which a lot of you may hear a lot about, and you have itemized deductions. When you are filing your taxes, you do one or the other. Okay? You're not using both of these. You essentially take whatever one is bigger. If I made $50,000 in a year as a self-employed company, but I had less than $12,000 in itemized deductions, I should just take the standard deduction. The standard deduction is basically the government saying, here is how much the average person spends being able to live and work in the United States. General expenses. This is kind of like I drive to work every day. I have to keep upkeep on my car. Standard deduction, right? I have basic medical expenses. I'm out sick for a couple of days and I don't get paid. Standard deduction, right? Like that's sort of this catch-all lump sum of money that's shaved off the top of the taxes, your gross income, right? So if I get paid $50,000, I take off $12,000 as a deduction before I'm taxed. However, if you spend less than $12,000 to be able to earn your self-employed income, you just take the standard deduction. You take the $12,000 if you're single, $24,000 if you're joint. That's in 2018. 2019, it goes up by about $200 because of inflation. They always kind of raise it typically. If you guys remember, before 2017, the standard deduction was like $5,000 or $6,000. With the new 2018 tax bill, they've like doubled it practically, right? Now you're getting $12,000. The main reason for that is that while you got $5,000 or $6,000 as a deduction before, you got a lot. Everybody had these different tax credits, this thing, that thing, yada, yada, yada. The new 2018 tax code said, let's just get away of all these little side cases and just raise the standard deduction. That's essentially what that was. Okay, so that's why there's such a drastic difference in this. In 2019, like I said, it goes up a little bit. Itemized deductions, and it sucks. We're gonna leave politics out of this. That's just basically the what it is. Itemized deductions. This is basically when you say, hey, I bought me a new webcam. Hey, I bought me a new computer monitor. Hey, I bought this game. Hey, I went to this PAX convention. I did this for business reasons to help me earn an income. Therefore, I can take this off of the amount that I am taxed. So if I have $100,000, right? If I get paid $100,000 and I buy a $100 webcam, well, congratulations. I just knocked myself down to $99,990, right? Yep, I'm going to talk about that too, McAllister. So if you are running your stream and you are really confident that you are not spending more than $12,000 in a year, and that's the way you want to go about it, then hey, just take the standard deduction. Don't keep track of anything. Probably should do it anyways, but I'm just saying, if you spend a lot of money, and I personally spend a lot of money on the stream because every amount of income that the stream gets goes back into the stream, I'm above that $12,000 threshold. Therefore, the itemized deductions work for me. Right? I can save more in taxes if I keep track of it, but it's a lot more held organized. But I'm going to show you a tool later on that I really recommend personally. So all items that you use for work, your webcams, your games, your consoles, going to this convention, etc. You drive from your house to the airport to fly to PAX East. That mileage can be deducted. However, if you take standard deduction, you don't get to take your itemized deductions. So if you have $12,000, if you want to take that $12,000, you don't get to claim that $100 webcam and this $200 thing and this $2,000 trip and this and that or that. You do one or the other. You either take the standard deduction or you take a combination of all your itemized deductions. This is based on your income for a certain stream. No, this is your total combined income. If you are self-employed, this is your total combined income. If I, like for instance, for like me personally, I get paid income. If I had a W-2 and a self-employed at the same time, look, you can take itemized deductions as W-2. Hey, what's up, Shorty? It's good to see you, buddy. But most people working W-2s don't have enough of the itemized deductions, right? Self-employed people typically do. Typically. It's from all your, at least in the United States, it's from all your combined income. So it's not just 12,000 from that. If that's all you made, J-Strong, 100%, that's all you made was 12K or less, then you can just take the standard deduction and be fine. Right? You have to itemize on a Schedule C, even if the standard deduction is, sure, yeah, you still have to fill out a Schedule C. Sure, yeah. That's what I mean. This is more gearing toward focusing than on just doing it, because I can tell you I lose money every year on the stream. So there is, I didn't put it in my notes and I probably should have. There is a situation. When does self-employment become a hobby? Is your hobby a business to the IRS? Yeah. So there's like a situation where it's like, in certain situations, you may just be classified as a hobby and then you can't deduct anything off your taxes. Like you can't just operate a hobby. I think the basic idea is that you can't just operate a hobby just to reduce the amount of income you own and just dump money into like a hobby, right? So when does a hobby become a business? And it's like, yeah, it's kind of like, I guess it'd be up to the auditor, you know, if you got audited or whatever. Do you depend on the income for your activity of your livelihood? Are your losses due to circumstances beyond your control? Do you change methods of operation to attempt to improve profit? Like, are you operating as a business and self-employment to make a living on, or are you just doing this for fun and you're just like spending money for the sake of spending money? Because what they don't want you to do is have like 2 jobs like me, and then, oh yeah, I'm going to go do coin collecting and then being able to duck my hobby, right? Or if streaming was like, psh, I'm spending a lot of money simply to reduce the amount of taxes I owe. Like, that's when they kind of draw this line here. If we're giving a web show on running your stream as a business, Shorty. If I remember a rule, it's after 5 years, home business must operate as a profit. Maybe, yeah, like do your own research in that regard. But yeah, there's like certain kind of things when the government basically goes, okay, you can't keep using this as a way to reduce your taxes anymore. This is a hobby to you. You're not treating it like a business, right? But then that could change back if you started making money from it. So I don't know. I don't know all the ins and outs of that one. That's pretty much how it works. All right. The $75 rule. This is a cool one that a lot of you guys probably don't know about, but you can go look this up. Actually, what I have here is this link from the IRS. IRS is publication by the IRS talking about the $75 rule. So as a lot of people are suspecting, if you are itemizing your deductions, the rule of thumb is you got to keep every receipt, right? I don't want to be audited, man. Like, I got to keep every receipt, because if I get audited, I have to show proof, like an itemized receipt showing this was a webcam that I'm using for my business. This was a game I bought on Steam. You have to have all these electronic receipts, right? Showing what the item was. However, there is technically, I'll have this on YouTube. Yeah. There is technically something called a $75 rule, which basically means so long as you can show an auditor on an electronic statement, like your credit card statement, and the company is identifiable from that electronic statement, you do not have to keep a digital transaction for that. Unless it's related to lodging, which is weird, but apparently if you had a $30 a night stay in a Motel 6, you have to have a receipt for that one. If you pay for something in cash, you have to have a receipt for that one, right? Because what they're going to do is if it's under $75, they're just going to look and see, okay, this was from Amazon. Hey, what was it? Oh, it's when I bought this, you know, this $10 cable to extend my USB. Oh, okay, fine. Right? That's typically how it goes. Now, you should always probably get in the habit of keeping all your receipts for everything. I'm going to show you the tool that I use, QuickBooks Self-Employed. It makes that really, really nice and easy, right from your phone. It's really cool. But it's definitely, for IRS purposes, it's a good rule of thumb to keep all receipts. But for IRS purposes, if you lose a receipt under $75, you shouldn't really have to worry about that in audit, so long as you can show that transaction on an electronic statement and the company that you bought it from is identifiable from the electronic statement. Okay? Promotional giveaways. If I'm giving away gift cards on Steam, that is advertising, right? I'm doing a promotion. I can deduct all of those gift cards that I purchase. However, gifting on behalf of a business is not the same thing as like doing like a giveaway. A giveaway is like I'm hosting something to help boost the income quality of the stream. Doing a gift, like when we raise the money for the moderators, right? We'd raise like $1,000 for the 12 moderators, right? I can only deduct I'm giving that to them as a gift, like a gift card to them, I can only deduct $25 per person for the entire year. So if I give my moderators a $100 gift card as a thank you for helping me out this year, here's a $100 gift card, I can only, and I do that 3 times a year, I can only take $25 in total for that one person because it's a gift. Business gifts are allowing you to deduct up to a certain extent. Now, if I'm shipping something to them, the shipping cost you can deduct, but the value of the item cannot exceed, you cannot deduct the $25. Yeah. Meals and entertainment. If you are at PAX and you're eating out at a restaurant, or if you go to a restaurant and you're talking about streaming because you're hanging out with a few buds and you're talking about the businesses of streaming and stuff like that too. Hey, guess what? You can take off 50% of that. All right. Yeah, right, Shorty. Only 50%. So if I spend $100 on a meal, because I take, hey, Law, like when we gone to PAX, right? And I basically one day I will take Law and a few others out, and we will, as a thank you for, streaming and stuff like that. All right, it sounds good, T-Butt. We always talk about streaming, this, that, or whatever. That is a business meal and entertainment. I can take 50% of that. Right off. It's gone. Right? You can't do the 100% because you're technically still providing a meal, which is part of your personal responsibilities as a human, according to the IRS, right? I will be at East, yes. Hey, what's up, Medic? Your home office. This is a fun one. One that I have run into many times and had to learn greatly over the year what it was about. Home offices. Am I going to be at West? I plan on being at West. All right. Here is home office information according to the IRS website. Typically, if you are going to claim a home office, you have 2 different options. You have the simplified. Let's see. Yeah, we're not there yet. You have the simplified deduction, which is basically TurboTax or any tax professional will obviously do this for you, which is kind of like, for the most part, you use this for business. And here's like a standardized deduction based upon general utilities and everything else, right? And it will calculate based upon the size of your office versus the size of where you live. And it's like, hey, here's like $1,000. Or you can do the regular deduction, which is like what I do. So, and that's when I actually calculate everything. So when it comes to a home office, let's say that for the sake of math, I have 1,000 square foot apartment and I have a 100 square foot office. Okay. 10% of my entire home is used for business. It is my business office. I can now take 10% of my electricity bill, 10% of my rent, 10% of my renter's insurance, 10% of the internet, 10% of my water bill, 10% of the expenses of the home or apartment where your office is. Okay. Here's the catch. And this is where I really suggest you guys do a lot of your own research or talk to a tax professional. I would really recommend talking to your tax professional, even above doing your own research, because this seems to be a gray area. And a lot of times I've talked with somebody, they always seem to be different from everybody else. If you read the IRS website, requirements to claim the home office. Regular and excessive use. This is the key phrase that I've even heard different tax professionals give me different responses. It's your principal place of business. Okay? And they go into like some explanations here. You must regularly use part of your home exclusively for conducting business. For example, if you use an extra room to run your business, you can take the home office deduction for that extra room. If I do streaming part-time and I'm using my den to let my kids play on, and I do streaming from that occasionally, and I go, do a lot of personal stuff on it, according to this statement, that is not exclusive use. Therefore, you cannot take the home office deduction. However, I have been told by a CPA, sorry, not a CPA, tax certified professional. I don't know if they were CPA or not, but they were a tax professional. They did taxes for a living. And they stated that so long as it is used for business use during business hours, it counts. So if your business hours are 8 hours a day from 9 to 5, and you use it for business during that time, if you use it for personal in the evening, then that's fine. But if you read this, it doesn't say that. This is the IRS's website. Talk to a tax professional on this one, because I get told different things by different people. In my situation, it's very easy for me to define this office that I'm in right now. I never use for anything other than streaming or working on BMT stuff. Right? I don't, if I use my laptop in my living room for anything personal I do. I don't even come in here unless it's related for streaming. So I am clear cut on this one as far as regular and exclusive use. Like this one's easy for me. But in some situations it may not be. But that's like a key one to like understand, right? Your vehicle, all right? 2 different ways that you can take off your vehicle expenses. If you use your vehicle a lot for work and you're spending a lot of money on that vehicle, substantially a lot, this is generally like your 18-wheelers and stuff like that, but your vehicle in general, you can either take the standard mileage deduction, which is what I take personally, and what I have seen work out for most people, or you can take the deduction of all, like, this is how much I use the vehicle for work. This is the percentage I use the vehicle for work. Here's all the expenses I paid on the vehicle, oil changing, new tires, brakes redone, it broke down, whatever. Toll roads, right? You can either itemize it, or you can take the standard mileage deduction, which is like 50 something cents a mile. At least it was the last time I looked at it. Since you know my streaming PC and my gaming PC is all in the same place. Yeah. So it's interesting, right? Like it's kind of like an interesting like thing with the home office, but that's really would recommend talking to somebody if you're not confident in that choice, and do your own research with that one, because like I said, I've been told different things by different people. The standard mileage deduction always works out for me. If I drive from here to BMT every day, I can't take a standard mileage deduction because BMT is my regular place of work in that case. However, if I need to ship something to Moku for business related reasons and I drive to the UPS store, I can deduct that mileage. Okay? If I'm driving from my apartment to the airport, I get to deduct that mileage as a standard deduction. 53 cents per mile. When I drove to Pac South and drove back and I did all the driving around there, which is like 700 miles. Okay, guess what? 50 some odd cents of that per mile I get to take off as a deduction. So you can either do standard mileage deduction, which always works out great for me, or you can do the conglomeration of car registration fees, yada, 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 yada. So when you get to doing your vehicle, this is very, very important. You need to keep a log of all of your miles, because if you get audited, they're going to want to see some log of all your miles. You also need to write down January 1st of every year what your odometer reading is, and you need to write it down on December 31st at the 11:59 what your odometer reading is, because that's generally how TurboTax and a few other places want you to enter in that information. What was your odometer at the start of the year? What was your odometer at the end? Like, it's kind of dumb, but that's the way they want to do it. For the most part, I think there's like another option where you can do it slightly differently, but you just have to write it down. Yo, that's like per diem. Yeah, yeah. Do you need to keep a log of your work miles or a log of all miles not even for work? No, that's basically what they do. You need to keep a log of all of your miles that you do for work reasons. And then you need to keep what was your odometer reading at the start of the year? What was your odometer reading at the end of the year? And then from that, then they look at, oh, what was the percentage you drove or whatever, if you want to use itemized versus the other. Right? But that's what you have to enter in like on your forms and stuff. So it's dumb, but you do. Okay. So yeah, something to keep in mind. Anytime you go to some place that is not a regular place that you go to, and by regular they mean like 3 out of the 5 days a week, I think is the technical term for it. Like what they mean by regular driving. As you're like, I can't drive the BMT every day and then claim that distance because that's like driving to an office as a W-2. Then you can deduct that. Going to the electronics store to buy something for your stream. When I drove to the Microsoft store to do the streams over there, that's a separate out of the way thing for me for a business reason. I can deduct that. Yeah, you can't deduct like your work commute to like your place of work. Yeah. So, equipment. All of your equipment can be deducted. Your PlayStation, your controllers, your cables that you buy to extend stuff, your can of air to blow out and keep your PC maintained, the lights, the green screens, all that type of stuff. There is a $2,500 rule with this. If an item is above $2,500 as a single purchase, clothing. Yeah, if you use clothing exclusively for work, or at least a percentage of work, and you can define that percentage. I use it 50% for work, 50% for personal, but I bought it. It definitely helps me with work reasons, like something you buy to wear on stream can be deducted. Right? And the tool that I have actually helps you like classify all this. So like my robe, when you do the full, if that's something you use for your business, Alan, then yes. Is my understanding, yes, you should be able to claim that. Definitely talk to somebody, a certified tax professional, but yes. Now, if it's like my normal clothes that I would wear anywhere and everywhere or whatever, no, I can't deduct that. And I don't believe uniforms can be deducted or they're part of your work. Yeah. This would be like, yeah, like when I bought like the costumes and stuff like that, or when I buy the hats, this is uniform is the category I put this under, right? Because this is for stream. It's for gimmicks in the stream. It's for trying to increase the entertainment value, whether or not that actually works or not. It's designed to help receive an income for the stream, right? Therefore, these are deductible. Now, there is a $2,500 rule when it comes to equipment. If an item that you have purchased was purchased for more than $2,500, guess what? You can't just deduct that. I couldn't go buy a $10,000 computer from Corsair and then deduct that $10,000 from that year's taxes. You have to do something called depreciation, which is basically, this is an item that's designed to last over the course of several years, and it's an item that loses value over time. And the value that is calculated on your depreciation forms, like if you do TurboTax, whatever, this is all like guided for you. Then that loss of that depreciation value, when my computer goes from $10,000 to $7,000 in these depreciation calculation that they have, that is an interesting question, Law. I was gonna get into that. But you depreciate that value, and it's the amount that's lost every year. That's what gets deducted. Now, when it came to the case of that $3,000 computer, but I bought the individual parts from different vendors, I don't know. I don't know if that's counted or not in that case. It's a weird one, and I wondered that. It is something that I am going to be talking to whenever I finish all my taxes. Personally, I'm going to be talking to my tax professional and be like, so how does that work in this case? Because technically it is a single item worth X amount of money, but I did buy everything individually. I could swap everything out individually. How does that function? If it's under $2,500, you can depreciate it, but you don't have to. You can simply itemize it and reduce it. Yeah, exactly. That's like a weird edge case that even I don't fully understand. Yeah. So that was a good one, because I did have that question whenever I started doing everything. I was like, how does this technically work? So I don't know yet. I'm going to find out. All right, sounds good, Kuya. I guess Butcher, maybe. I don't know. Yeah. So that's the $2,500 rule, right? If I buy, I don't know, Lo. I don't know. No clue. Your transaction fees that PayPal takes. If someone gives you a $10 donation and PayPal takes off their whatever, you get to deduct that. There's a category for it. All right. Credits. Oh, yeah, absolutely. If somebody sends you a $10 dono and you receive $9 from it, then you get to take off that $1. Everything that you spend to earn money through the business, and that's basically money you have paid PayPal, is deductible. Right? Self-employed tax credits. There's 2 of them that I wanted to mention. There's probably a lot more. I don't know. It depends on you. Usually if you use TurboTax or if you're doing tax professional, a lot of times they'll do all this for you or ask you these questions. The 2 big ones to look out for is something called QBI. QBI is brand new in 2018, and it saved me a lot of money on my taxes. Probably reduced my taxes by about $2,000 or $3,000 that I would have owed. Right? QBI is something that's brand new in the 2018 tax code that allows you, if you make, I believe as single, under $156,000 a year as a self-employed proprietorship, sole proprietorship, partnerships, pass-through LLCs, well, we were talking about all the LLCs before, or self-employed in general. You don't have to have an LLC. But if you are basically the concept is if you are a self-employed business, there's this brand new tax credit called QBI, qualified business income. And it basically allows you to slice off up to 20% of your income off of being taxed, just right off the top before you do deductions and anything. It made about a $3,000 to $4,000 difference on my taxes this year for me personally. So research it. It's called QBI. It's pretty awesome. As far as my understanding, this would apply to you as a streamer because you're self-employed, right? Earning all this money. So TurboTax will ask you questions, right? Like if you use TurboTax, it'll go through there. It'll ask you questions, and it's like qualified business income section. Answer these few questions, and it will say, yes, you got it. No, you didn't. If you are self-employed and you have health insurance that you are paying for, like through healthcare.gov website, you can get the self-employed insurance deduction as well. Whereas if you meet certain qualifications and you paid a certain amount in premiums and you're not already getting a reduced thing, you can deduct your health insurance off of your taxes. And that's sort of like a deduction credit because it's not everybody can deduct it. It's like in certain cases you qualify to get this deduction. So that's why I put it in the credit section. But you can deduct the expenses of your stuff. Also, on a side note, I didn't put this in here. I have an HSA that I've had set up for a while, which can also help you reduce your taxes. I put money into an HSA. I then spend that HSA on medical things, like when I get those back injections or if I go get my cholesterol medication. And up to $3,500 of what I can contribute can be reduced or it can be taken off of taxes. HSAs are nice. Should look one up and see if you can get one. Especially if you spend enough on medical. You can definitely take off a chunk of your taxes by using one. So yeah, that's basically deductions, credits, whatever like that. All right. So the next section is the 1099s. You have the health savings account. All right. So we're going to get into 1099s next and what exactly a 1099 is. Any questions so far on deductions, credits, yada, yada, yada. I know Jay Strawn is really interested in the 1099 case. Bueno. 1099s. What are 1099s? 1099s come in different forms. A lot of you are probably familiar with a few of these. MISCs, right? Miscellaneous income is what that means. R is profit sharing, retirement, pension, stuff like that. INT is like, you know, I have $100,000 in a bank account and I got like more than $10 in interest from that bank account, I would get a 1099 INT. I personally don't receive any of those. A 1099K is when you have third-party merchant services like PayPal, or if you had like a merchant service to collect credit card payments or whatever like that personally, you would then get a 1099K from them under certain conditions. G is government. C, I don't know. Oh, debt. Like if you had debt canceled for whatever reason, then that's like a 1099. C, B is like brokerages and exchanges. And there is 20 more of them. There's a lot of different 1099s. But I kind of want to put a few up there, but there's a lot of them and you get them for different reasons and they'll have slightly different information. So what is a 1099? All right. So Jason, here's the answer of a question I know you've had burning in your mind a lot. A 1099 is a cheat sheet. It is basically a company telling you what they've paid you for a certain activity, right? Whenever you file your taxes and you go to TurboTax and you're entering in all of your information and you submit your taxes electronically, none of those 1099s are sent with it. They used to be, I believe, like a long time ago. You had to staple all of your 1099s and W-2s and everything and you would send that up. But not anymore. In the end, all you're filing is a 1040 with maybe a Schedule C attached if you're self-employed, right? They don't see the $20,000 from this, the $5,000 from this, the $200 from this, the $300 from that. They see the combined total. Now, typically when you do your taxes literally by hand outside of TurboTax, they'll give you all these worksheets. They're called tax worksheets. You then enter everything there. Then it's like, okay, add all this up and go put it in box 14D, right? And then that's all that's ever sent up. They don't send you up. You don't send up the worksheets or any of that stuff that you do. Okay. But it is a cheat sheet. You do not have to have 1099s to file your taxes. Companies are required to send them to you under certain circumstances. But you do not have to have 1099s to file. If you know all of your income and what you received it for, because you kept track of it, you can just file your taxes. They are cheat sheets. They are basically there to say, this is how much we paid you. This is how much was withheld, if we withheld anything, and a lot of us in these situations don't get anything withheld. If you're missing a 1099 and a company is supposed to send it to you, they will get a late charge. The company will, if they do not file by January 30th. They actually have to have it postmarked in the mail by January 30th if they are required to owe you a 1099, and they will get penalized if they don't. So if you're missing a 1099 from a company who is supposed to give you one, you need to call that company and be like, what the hell? Now, it is also a requirement that if a company is going to owe you a tax statement, W-2s, 1099s, or whatever, and you move after not working there anymore, you need to call them and let you know, hey, I moved. So when you send out tax forms, mail it to this new address. That's up to you. So the company can show, hey, we did send the 1099, but they didn't give us an updated address and you're late on your taxes because of it. Guess what? It's your fault now, not the company's. This company was like, we sent it, because they'll keep records. Big companies will. They'll show records that they sent all this stuff out. Okay. But in a lot of cases, even though you think you would need a 1099, you may not actually need it. Like in the case of PayPal, you'll get a 1099K from them if you have more than 200 transactions or more than $20,000 of payments received. Then you'll get a 1099K. Other than that, they're not going to send you one. And just because you don't get a 1099 does not mean you don't owe taxes on that. If you earn $5 through PayPal and you earn more than $400 of the activity, you owe taxes on that $5, whether or not you got a 1099 from it or not. Okay. It's like if I was a plumber and I go fix random people's house and I was self-employed, just did it on my own, I'm not obviously getting a 1099 from everybody who paid me. Right. So, you know, there's like certain situations, just because you receive the money doesn't mean that you don't owe taxes on it, just because you don't get a 1099. So if you're missing a 1099 and you're supposed to get one, like if you're a contract employer, then you need to contact that company. And then if you are still unable to get one, then you need to probably call the IRS and be like, look, I don't have my 1099 from this or whatever. But the 1099s are not required for you to file your taxes. They are not sent up electronically with that. So this is a 1099. This is 2018's 1099 MISCs. All the other 1099s are slightly different. All right, so we're going to kind of go over the boxes that are here. Okay. Payer's name. This is who is paying you. And TurboTax and everything will have you enter all this information because it's basically a part of TurboTax's records. So it looks like you're entering all this information and it's all being sent up to the IRS, and it's really not. It's just so the IRS can keep track of everything. So when you go back, you can look exactly who paid you at what time, who did what, etc. Right? The payer's TIN. So in the case of a big company like Microsoft or whatever like that, they're going to give you their EIN, right? Or if it's like me, if I didn't have an LLC and I was paying a contractor this amount of money, I would use my social security number here. Their TIN, which is either their social security number or their, you know, the EIN number. This is your information, right? Account numbers, see instructions. I guess if there's accounts involved. FACTA filing requirement. You know, this is either checked or not checked. I'm not quite sure personally what that means. Okay, then you have all these other boxes. All right, so you with me, Draystron? And make sure Jaystron's still here because he had a lot of questions regarding this. All right. All loot is disabled anyways. All right, so on your 1099, I'm imagining the 1099 that you got, Jaystron, you have box 3 filled out, right? Other income. Right? The reason that you do rent separately than you do royalties. Federal cards to pay for assets and okay. So if you hold foreign financial assets and that's what you're getting this reporting from, there you go. Then that's FACTA filing. Different case with different forms, etc., etc. Rents work a little bit differently. Royalties work a little bit differently. Other income, right? So if you get paid $50 and somebody puts this in other income, this will probably in a lot of cases be zero because a lot of times for like the one-off payments, or if you're a contract employer like me, you don't actually have tax withheld, any of the income tax withheld. But actually you might have gotten non-employee compensation. You might have box 7 rather, not box 3. You probably got non-employee compensation because you did work for them, but you're not an employee. It's not like you won $100 from them or something, which I think is what that would probably be. I don't know. You have it in box 3. Okay, so it is other income. So I guess that makes sense. Yeah, when I get paid by BMT, it's in box 7 because I'm a non-employee being compensated like an employee would be. Yeah, in the end, Jaystron, in the end, this is all combined to one thing, right? If you use TurboTax, it just does it all for you, right? QuickBooks Self-Employed is one of the main ones I use, Codex. All right, sounds good, Foxies. All right. So, in the end, Jaystron, as far as I know, box 3 and 7, they're all going to go down to the same thing in the end as a single line item. So, it doesn't really... I don't know if it matters, but maybe it does in the cases of these other boxes. In the end, this is just basically how much the company paid you, how much they withheld, and the reason that they paid you. Non-employee compensation versus royalties versus rents versus whatever. And then some very specific, if you have state taxes withheld, you know, it'd be down in these lower boxes, all right? So these are cheat sheets, right? I don't send this up, you know, with the company or whatever. Or with my, sorry, I don't send this up when I file my taxes electronically. Try doing TurboTax and questions and stuff, it got lost. Okay. It's always best to go somebody if like you have like really serious questions or help, but I can probably go over it because I'm going to go into TurboTax in a little bit and kind of like walk through it a little bit. So, okay. So that's kind of like your 1099s in a nutshell. Audits. So what does it mean to get audited? That's when the IRS goes, hey, we think something is weird about your taxes and we want to come check over everything. You can be audited for any reason. Professional, what does that even mean? Well, somebody who's certified to work in that environment would be like a tax professional. Somebody who actually where they have earned a certification saying, yes, they know how to do taxes. They know what they're doing. I fill out my own taxes. What happens if you make a purchase with a credit card? Then you would keep the itemized receipts showing what you purchased for a business purchase, and that would become a deduction. in that if you took the itemized deduction route. Yeah, TaxSawyer I heard is really good. I'm just so used to TurboTax and how they function. That's what I use. So you can be audited for any reason at all. They can just randomly decide, hey, you know what? Screw that guy. I want to audit him. They don't actually have to have a reason to audit you. They can audit you for whatever reason they want, just because they feel like it. They were in a bad mood that day. If you have more expenses than your income, then you'll basically report that you had negative income, and you would not owe any taxes. Or let's say, JStron, throughout the year you're paying quarterly tax payments, right, based upon how much you think you're going to owe, and then in the year you calculate it and you're like, well, shit, I actually shouldn't have paid any of that, and you'll get a refund. Right? So if they come back and audit you, they can only initially audit you for anything done in the past 3 years. Okay? I actually got a IRS document talking about all this. So you can only be audited for something in the past 3 years. So hey, guess what? If you did something back in 2011 and you made a mistake and you owe the government $1,000, guess what? You're fine. As far as I know. Don't quote me on that. But as far as I'm aware, you're perfectly fine. Right? They can only go back the past 3 years. If they find something in those past 3 years, they can go back more. And if they keep finding stuff, they can go back more. So I guess they could go back to 2011 if you had something in 2012, 13, 14, 15, leading all the way up. That kept them going, wait, you've been doing this for the past 20 years. Guess what? You're screwed. But they can't just go back to 2011 and look at that one. They would have to find history going back. Yeah, it's always a good reason to file even if you don't owe taxes. Because if you file 1 year, don't file the next year, file 1 year, don't file the next year, they'll kind of look at that as like, what the hell is going on? And it's better just to file and say, I don't know anything. If you've already filed your first time, especially. Yeah, exactly. Disclaimer, bottom of screen. Big disclaimer. They, according to the IRS's website and that link that I posted, they typically don't go past 6 years. Now, I guess if they feel that they're going to get millions of dollars, they probably will go back 6 years. But they said they don't generally go back 6 years. And most audits happen within the last 2 years that you filed. So, unlikely that I would get audited for 2016. Still possible. But more likely, if I was going to get audited, it would be for 2017 or 2018. Right? But I'm not going to get randomly audited for 2008. Unless they have found something super drastic leading for the past 11 years. That's like, wait a second, you owe us like millions of bucks, man. Like, what are you doing? Penalties. 5% for every month late. If you don't pay your taxes or you owe from like 2 years ago. So like, hey, guess what? If you haven't been doing your taxes correctly, or you haven't been doing them all, and this is the first year you filed, and they decide to go audit you for 2017, and they figured out you were streaming then and earning money through the situation, hey, guess what? You not only do you owe those taxes, and at that point, to have any deductions, you would have to show proof of those deductions from that time. But you would get charged 5% for every month late, up to 25%. So if you had $10,000, that would be a $2,500 penalty because you didn't pay your taxes. Up to. If you are getting a notice that you are audited, I would suggest hiring a tax professional because they're sort of like your lawyer in that situation, more or less. And they're going to be able to make sure that the auditor is, they're going to be able to help clarify on your behalf because you're paying them. Like, hey, do I really have to do what he's telling me I have to do? And they'll be able to cite their knowledge or articles or whatever they can. Also, you need to get, and it's probably a good idea to always stay organized, right? Because if you get audited and the auditor comes over and you're sitting down to your taxes and you throw a big ball of unorganized receipts in front of him or her, you can't just do that. They're not going to siphon through your taxes for you. They're going to look at this charge and go, where is this transaction at? What did you buy for this $500 that you spent? And they'll just go, I'm not going to allow you to count it, and they'll just check it off, and then therefore that deduction never counted, and now you have to owe taxes on that plus the penalties, right? I'll show you a tool that makes that really, really easy, called QuickBooks Self-Employed. It's glorious. I freaking love it. It's amazing. Been using it for now the past like 3 years. It's glorious. All right. That's audits. How does everybody feel about audits? Hey, what's up, Atanchi? All right. So the next thing that I'm going to go do is talk about the different tools and resources that I personally use. You just got to get really organized before an audit and be able to go through every transaction and go, this was this payment, this is what I bought. $75 rule. I'm going to show you something really, really awesome and really, really cheap, if not free. Okay, I'm going to show you TurboTax, QuickBooks Self-Employed. If you're looking to file an LLC, I personally use LegalZoom. Nolo has a lot of good information on LLCs and the requirements. I use LegalZoom to file. It's a step-by-step process. You just go through, answer the questions, do the stuff. It keeps track of everything for you. It costs money, but hey, it makes it easy. But when it comes to taxes and managing my expenses and everything else, I use these two tools. But before we get into this, are there any questions anybody has whatsoever about any of the basic, all that tax info that I dropped? Kind of giving you guys a crash course with self-employment taxes there. I'm going to show you the tools on how to manage this, but I'm curious on how many people are still have questions. Anybody have questions right now before we start showing off some cool stuff? Because a lot of this sounds scary, doesn't it? Sounds very, very scary. Okay. All right. I'm actually, hey, let's do it real quick. Let's take like a 5-minute break because this has been a long 2.5 hours. Everybody go take a break, stretch, use the restroom. I'm going to go grab me like a little something to eat and we'll come back. All right. And we'll continue here. So be back in a second. Hello. All right. I'm hoping you guys are finding this information helpful. I worked really, really hard on this. I just want you guys to like the information. Oh, yeah. Like I said at the beginning, I don't know if you were here at the very, very beginning. But Hacky Things LLC, which is what I currently use right now, is the second company I've actually owned and operated. And so I've been doing self-employment taxes for the better part of 9 years. I'm not a tax professional. I've been doing it a long time. I have personally never gotten audited. So I feel confident in how I handle my tax situation. I'll say that. Did Dr. Monster share their phrase? Yeah, exactly. 100%. Yeah, don't get the knock on wood. Yeah, exactly. Counted 300. Ouch, Moku, yeah. I mean, as long as you're keeping track of your own mileage log, Moku, should be okay. All right. We're not going to do questions yet, but I did set up a fake account here. Let me get logged in here. Make sure it doesn't actually log into my personal one, because I created like a fake empty one, because obviously I don't need you guys to see my personal financials. All right. How many of you know what TurboTax is? This song is way too intense. How many of you use TurboTax? Hey, me too. It's good if you want to do your own taxes. A lot of people recommend Tax Slayer as a thing. You don't have to use one of those services if you just want to fill out all the forms yourself and you don't have to pay anything. However, it's generally way, way more complicated because tax companies like to lobby the government to keep taxes as complicated as possible so they stay in business. Because hey, if it was easy for everybody to do their taxes with a few little lines of stuff or whatever, a lot of these tax companies may not exist anymore. I know TurboTax, yeah. All right. TurboTax is owned by a company called Intuit. Intuit is a big company that makes a lot of different business and personal finance products. One of the more common ones people know about is QuickBooks, right? Which is like a big financial management system. I used it whenever I ran my first company. It was just QuickBooks. I think QuickBooks Small Business, I think, was technically the thing that I used. Mint.com, yep. Which is like a big, thing to manage all your personal budgets and everything else. Where am I spending my money? Oh, look, I'm spending this on food. Like, what the hell? Like, it is pretty nice. If you're familiar with how Mint.com works, or some of the modern QuickBooks stuff, self-employed, which is what I'm going to go into, and what I consider a really valuable tool for you guys to get, then you might be familiar with like attaching your accounts and having it download information from your accounts automatically. Self-employed also does this. It's one that makes it super, super nice. But you don't have to use QuickBooks Self-Employed that way. But if you use TurboTax and you use the TurboTax version that allows you to file your Schedule Cs, the ones that you pay more for, I think it's like their Premier Edition, right? Is what allows you to file your LLCs. At least last year, or the past 2 years, TurboTax has allowed you to use their other products, self-employed, for free. So if you were filing with TurboTax Small Business or Premier or whatever, you got self-employed for free. If you buy self-employed, it is an extremely expensive application for $5 a month. That's all it is. $5 a month. And to me, it's entirely worth it. At least it used to be $5 a month. I don't know if it is now, but it used to be $5 a month if you just bought it outright. All right. QuickBooks Self-Employed. Let me make sure I get logged in here. I created a fake account, or just like a brand new account. Oh, they want to confirm my account with a freaking... God, I gotta go get my phone because they want to send me a... Oh, it's my phone's right here. Give me a second. They're gonna send me a code to verify, because I did this on my laptop, so my desktop is like, oh. There it is. All right. QuickBooks Self-Employed. This is the magical app that I do all of my management of everything in. It doesn't handle every specific edge case, but it handles a lot of good stuff. The Self-Employed cell phone app, I get the cell phone just for this account. But yeah, if I go to subscribe, $5 a month for Self-Employed, or if you get QuickBooks Self-Employed tax bundle. Oh, I guess that one. Faster filing schedule, so you enjoy all the benefits. Okay, so maybe you get extra, but if you just want to do the basic ones, you can get it for $5 a month. I guess this is like the upgraded version. And I think this is what I have, but I get this combined when I use TurboTax or whatever. Because I do the Self-Employed TurboTax, and so it costs me like, you know, $100 or $80 or whatever the hell it is, and whatever. So this is QuickBooks Self-Employed, and this is why this application is so magical. This basically is a place for you to manage the separation of your personal and business assets, calculate how much you owe at each tax quarter, manage your home office and how much it's saving you, and keep track of all of your receipts. Okay? It is a magical all-in-one tool. If you're used to Mint or other QuickBooks products, you can, in your settings, actually attach your bank accounts, right? So if I had Wells Fargo, boom, Wells Fargo, enter your username and password. Oh, let's not do that. That's my Dashlane entering crap in, right? Let's do accounts that I don't have. My American, actually this is probably the freaking password to the website if it puts it in here. American Express. They have hundreds and hundreds, if not thousands of different accounts, even for like the small crap that you don't even know. Like there's like a bank here that's like Southside Bank in Texas. Like this is like a local bank in my area, and they have account setups for this, right? They have PayPal. They have, they're not gonna do something like Streamlabs, but Streamlabs pays to your bank account, so you can just track your bank account in that case, right? So you attach all these accounts and it downloads. So if you have the PC version, you get the app for free. I don't know. I got QuickBooks Self-Employed for free because I used TurboTax, a certain version of TurboTax. And it was like, hey, do you want to use QuickBooks Self-Employed? You get it for free for the year because you filed with TurboTax Premier. And I was like, sure. And I started using it ever since. That's why I've gotten it free. Okay. So you can attach all your accounts and it automates a lot of the stuff for you. I'm not obviously going to automate my personal accounts because I don't need you guys seeing my personal stuff, but we're going to do stuff manually, but it's sort of the same concept here. So this is what it looks like whenever you want to look at your transactions. So if you download your transactions, all of these are populated in here for you. You can create rules that do auto categories, stuff like this. So if I say, hey, look, this was a donation from Lol 281, right? This is my expense that PayPal put in here. Cool. This was for $10. Bam. Select category, income. Boom. Business income save. Bam. Entered in. Good. Go. Awesome. All right. Let's see. Let's add in a new account. How do I actually add in a new account? Well, I guess I just downloaded all the transactions. I don't ever do this manually because it's all done. Oh, add a transaction. Here we go. Okay. Let's see. Amazon Web Market. I don't know. Whatever the hell it's called. $125.32. Right. This was for a new webcam I bought, so it's going to be other tools and equipment, not greater than $200. The $200 thing, I think $200 is at the point where you can depreciate an item if you wanted to. $2,500 or more is where you have to depreciate, but I think that's why they have the greater than 200s. I always put everything here unless it's greater than the 2,500s personally, right? And so I do this here and I click save. Boom. So I have this and this and this. So let's kind of amp up some stuff here. Let's just say I get, you know, payment for work, like a company's paying me, or let's just do this strictly streaming related. So donation from, you know, like Smeghead, because he likes to throw a lot of money around. He spent $50,000 on my channel. I'm just trying to throw up numbers here. Just gonna get it going. And actually this is income at this point, right? Hey, what's up, Hassel? Hi, Margot. All right, so I want to throw up numbers because I want to kind of get this going up here. Okay. So you can see, because this is quarterly, hey, look, I have $50,010, and I spent $125. Therefore, this quarter, every quarter, if this is all the money I made, this is how much I would have to owe each quarter, estimate, and this is how much money I would pay in taxes, estimated taxes, okay? So it calculates a lot of this for you and shows you this is how much you should pay every quarter. So if you use that EFTPS website we were talking about earlier to make electronic payments, you actually attach all that here. So if I click pay now, it's like, hey, this is how much you have to pay for first quarter. Here's your information, here's this, and then it's like use, yeah, I think even after this, it's like, okay, enter in like your EFTPS information, like your PIN and your name account or whatever over there. And then it makes that payment for you, which you've already set up your bank accounts and everything to withdraw it. Okay. So this kind of keeps track of everything for you, right? And it goes back all these other years that you can see and all that. You can, this is where you would say you got a home office. So I'm like, hey, I have a 100 square foot office. Here's like the standard deduction for a 100 square foot office, standard versus actual. If I want to enter in all my expenses, I could, but this would be the standard deduction, $500, boom. And then as long as I have this, you can see that my business profit, which is what I'm taxed on, has actually gone down a little bit, and so has my taxes owed. So what happens when you predict you're going to make 30K off donation, you make 60K off today, so does it matter how you underpaid each quarter? You are required to pay the estimated taxes that you earned in that quarter. QuickBooks Self-Employed specifically tries to get you to gauge what you owe. And they try to spread it evenly over the year. Right? But if I made $50,000 in the first part of the year in one quarter, and then $10,000 in all other 3 quarters combined, then, and when I do my first quarter taxes, I go, well, $50,000, technically I need to pay that much. As far as I'm aware, disclaimer here, as far as I'm aware, as long as you don't owe more than $1,000 by the end of the year, and you have paid quarterly to the best of your abilities, so the only way they're ever gonna like really hit you is if you knowingly withheld large amounts or whatever to like gain interest on it or something like that, then as long as they show that you are making an effort and you don't owe more than $1,000, you won't get penalized. But if you were supposed to pay $10,000 in a quarter and you paid 100, and then you paid the rest of the 10,000 at the very end of the year, you're probably going to get penalized for that. I mean, you would probably get penalized. If you owe more than $1,000 at the time you file your taxes, you get a penalty for that. That's fine. Codex. So QuickBooks Self-Employed actually helps you like manage all this. And so we can see here, and this takes into account like your deductions and everything that this is doing right here. Yeah, those would cause like red big audit flags and stuff like that too. Because remember, when you pay your taxes quarterly, they know who it is that's paying. They have all those records because you use your social security number or your EIN number to pay it, right? So let's keep adding a few transactions here to show an example. American Airlines, you bought a ticket from American Airlines to go to PAX, right? That would be, let's just say $350 for this one, right? Round trip ticket. Here's travel expenses. Boom. This is a category. Bam. Save. Right. Let's watch this go down. It takes a second. Dun, 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 dun. Boom. Look, that just saved me $22. It all adds up, right? And this is how you keep track of it. And this is how you know how much quarterly you owe and everything else, right? And this will update as you go. And you'll see this number go up and down as you receive donations and everything else. And you kind of you're just estimating it. And I feel pretty confident with these estimates. And I've just paid what that estimate has stated. Every time that I get payments from like BMT, or if I feel I'm getting payments from the stream that I am going to have to owe taxes on because I'm not spending that money before filings, then I will, I'll throw that into a separate account, a separate bank account. It's called taxes in my business profile. And they basically, and I just withdraw from that. I set up my EFTPS with that bank account, and I just, oh, look, I got to put $100 over here. I got to put $1,000 over here. And then that money is just set aside as like, this is going to go to taxes. So, if you are paying taxes, right, then like every month, so let's say for the sake of argument, you know, $10,000 in taxes, exactly, perfect, or whatever like that, and you pay through EFTPS, if it's downloading all of your accounts, like this is the way you would have it set up, is this would be tied with your accounts and it just pull all these transactions automatically, then it would be like IRS payment, and then there is a category that say you paid $2,500, or I paid that $2,711 right here, right? And look, estimated taxes, boop, bam, save. Now, what you notice is because I put estimated taxes here, this number doesn't change because, oh, taxes due by April 15th. Technically, that does change because now it's like I paid $2,700, I don't owe anymore. It's not deducted though. It's not a deduction. It's just this is how much I owe. But if this was like utilities for a home office, is technically what this was. It doesn't calculate it yet because it doesn't know that you've chosen standard deduction or regular. So it still thinks you're on standard deduction and not regular deduction. I don't actually forget how you change that because mine doesn't do this. There's like a way that you change like your preference because it's using standard even though this is actually would total up to be more, and you have to like switch that somewhere. Yeah, so it's kind of weird in like this case, but at the end of the year you can kind of like look at this and kind of enter all this stuff manually. But there you go. This will pull your bank accounts. What you'll do is a lot of times it will just say business or personal, and you click personal, or you can split something. If I, for instance, buy a Switch, a Nintendo Switch, and I'm going to use it 50% for business but 50% for personal, I can split that transaction. And if, let's just say that was a $300 Switch, $150 would be deducted on business and $150 would be marked as personal. And you can actually do that here. Now, typically, whenever you are, these are downloaded, you click a button right here, but it doesn't look like it actually gives me that option, which is kind of interesting. But it kind of gives you all, or it's a transfer. I transfer from this account to this account. That's like your other option that you have there. You can expand all these out and you can add all these other notes. Yada, yada, yada. LOL is awesome, right? This is my note here. Hey, and hey, look, drag and drop your receipt. So if you have a digital version of your receipt, then all you do, I just have a picture here, but I just upload this image here. And guess what? This transaction now has a copy of my receipt. Throw that paper receipt away. Or keep them in a box just in case QuickBooks ever crashes. But look, this is an organized approach. If you ever get audited, that you could just open this up, boom, here's a digitized version of the receipt. If you get the app on your phone, you can do all of that receipt taking from your phone. You go to the store, you get home, hey, pop out the QuickBooks Self-Employed app, go to that transaction, and take a picture of the receipt. Then go put your receipt in a big shoebox somewhere. But boom, you've now attached a receipt to this item, right? And you can do this for every transaction, right? So it's really, really cool. It allows you to sort by, here's business income specifically. Here's business spending specifically. Here's business spending in a certain category. Like if I want to look at all my travel expenses for a set amount of time. Bam. Let's look at it all in the past month or last month, this month, boom, here you go. Nice way to organize everything. Look at it by account. So if you had all of your bank accounts and PayPal and everything else all in here is good. I can exclude a transaction. So if a transaction was downloaded in and I'm like, wait, that's like in the case of a refund is when you would exclude a transaction. If I paid for something and then I returned it and I got the amount back, I just exclude that from transaction. That's not considered like I have a deduction with income. You just don't count it. You don't have an item to show for it, right? And then if we're in electronic downloads, it's like, do you want to exclude this transaction? You go, yes, I want to exclude this transaction. When PayPal downloads, it's going to have things like, here's the PayPal fee for $10, and here's a PayPal fee for the law transaction of 58 cents or whatever it would be for that fee. And then that PayPal transaction fee would have, guess what there is? Transaction fees, transaction and processing fees. Bam. Right? There's categories for lots of different stuff. Now, anything that you can't categorize in their list, and the reason that these categories are the way they are, and you have things like uniform, which seems kind of like an odd one compared to like, why don't they have these other things when they have uniform in there? These are actual tax categories on Schedule Cs and how they all relate to it. Because there's predefined categories where everything fits into, and this is that pre-definition. Anything else that's like random miscellaneous that doesn't fit any category, there's like other business expenses, all right? Now, when you fill out your Schedule C, you'll kind of label out, this is where you go, this is what you do, or whatever. Miles for trips. Oh, cool. Hey, guess what? The mobile phone can track your trip mileage for you. I like to do it manually, but this is my trip log, right? This is this date. This was the PAX South trip that I drove on. And this was 750 miles. Bam. Date on February 13th. And it should make my taxes go lower. Boom, there you go. Because it's doing the 58 cent per mile standard deduction right here. So it gave me $435 that was taxed, that was taken off before the tax. I'll see what I give you, newbie. All right, so you can go in here. You can see how much you owe per quarter. You know, this is taxable income Schedule C deductions. This is how much money you're taking off. I'll see you later, Deja Girl. This is the breakdown of categories. So you can see all of these big categories right here. These are your primary categories, like advertising, like you do a gift card giveaway, etc. This is all there. Your home office, business assets. If you are depreciating any asset, you see, if an asset costs less than $2,500, you may be able to deduct the entire cost that meets certain rules. Healthcare expenses, bam, like how much I paid for my healthcare.gov thing, right? That's all there. And then this is like how many payments you made for 2019. So, and then you can generate reports from this. You can generate a lot of stuff from this, but it's pretty freaking awesome. I do like this a lot. This software, like a lot. And it's very, very useful. And what's really, really nice is that whenever you're ready and everything's done, this imports into TurboTax. You'll still need to want to go through and verify everything is correct. I suggest you know how to do it manually from this to TurboTax, but it will import directly into TurboTax. I think the first year I tried that, it didn't work too well. It like doubled up on everything, or it put everything in all the categories, but then my other expensive category was like doubled or whatever, and it took me forever to figure it out. It was annoying. And then I just done it manually the last 2 years, but I think they've gotten better at it. Yeah, you always want to review, because in the end of the day, it's your responsibility to be correct on your taxes. Right? So this is what I personally use and attach all my accounts to, and this is what I use to manage everything related to my, when I pay, right? Like I said, you can pay through this. You keep track of all of your expenses, attach your receipts to it, etc., etc. Like I said, you can do that from your phone or just upload a PDF of your electronic statement. One thing that's really, really cool is they have this laboratory area. Where's the lab? Yeah, the labs. You can connect this to Amazon, and it will download your Amazon transactions for you. So if you buy something on Amazon, which is what I do a lot, it doesn't work in every case. Sometimes it's like, I don't know what this is, and it just doesn't do anything. but it will actually say like, oh, you bought some Ethernet cables and you bought a new networking hub on this transaction because I marked it as business. And so it will list that item there. I don't even have to attach a receipt. It's just there. Right? So it's cool with that. Import your work trips from Google. They have some connect to Coinbase if you actually receive Coinbase transactions, cryptocurrency. It'll connect to that and do all that for you. I use this set account purpose thing, which is trying to like, I mainly use this account for business, so mark them pretty much as business in most cases, or mainly for personal or mark it for personal, but it always was giving me bad. I didn't like it in the end. Allow the categorizing of personal transactions. If you just want to categorize personal transactions, you can. Mint.com is generally better suited for that, for kind of budgeting in general. But yeah, this is what I use, and it's freaking awesome, and I definitely recommend it. I am not whatsoever paid by Intuit, but I have been using this the last 2 years, and it is absolutely glorious, and I like it a lot. And you'll have hundreds and hundreds and hundreds of transactions, and about once a week, I log in and I go through and I mark, okay, this is business, this is personal, this is business, this one's split. Oh, this wasn't categorized correctly. This is a new category. And I just verify it throughout the year. And when I come to the end of the year, I'll do one big final review of everything. But then, you know, there you go. Like search for a transaction. So if I want to search for, where's all the stuff that has the word law in it? Like right here, right? Well, this is like a new product. This is not QuickBooks. This is specifically like self-employed, single person, one activity. Like, there you go. What this doesn't do is this doesn't do multiple activities for you. This is just a single self-employed activity. So if you have, you can put, you can't really easily put your W-2 in here. Like, right, if you're doing multiples or whatever. IRS doesn't even receive that information. You don't send these individual things up to the IRS. IRS just goes, how much did you spend in each category? Advertising. How much did you spend on advertising? How much did you spend on this? How much did you spend on that? Now, if you get audited, they're going to want to know where everything is from, if they have questions on it. I guess you can like receive invoices, or you can create an invoice for people and it automatically tracks through all this. So it's a very, very cool. Yeah, bring in expenses automatically. Add your bank accounts, right? Which is what I do. It's glorious. There's like so many. This is like my first time logging into this account, so there's like so much stuff here. Like, look at this. But yeah, this is like your dashboard. It kind of shows you totals of everything or whatever. Yeah, I don't know. What do you guys think? You guys got any questions on QuickBooks Self-Employed? I recommend it. I highly recommend it. Poker King, thank you for the sparks, man. And everybody else has been dumping all the sparks today. I appreciate it. All right, do you guys? So when is Intuit gonna sponsor me? That'd be kind of like a weird sponsor. Dude, yeah, I'm sponsored by G Fuel. Dude, I'm sponsored by this crazy esports league. Yeah, I'm sponsored by Intuit as a gamer streamer. It does taxes and finances. Could happen. Hey, I mean, Ninja got sponsored by Uber, right? So there you go. Does anybody in here have specific questions on TurboTax that you're like confused on and you want answers in? Because for the most part, I think most of us have used it. A lot of it's just sort of handheld. But I'm willing to like go into TurboTax if somebody's like, oh yeah, I really am confused on this section. So one thing that I also do on TurboTax, and this cost and expense, is I get their like ultimate package for self-employed. And the I get the CPA help. So at any point I can connect and talk to a CPA if I have a question. And then whenever I'm getting ready to file my taxes, I can set up a CPA review, which is like a phone conference thing that you do through their website and everything else. And they go through beforehand, and they'll make sure that they think your taxes are good. And I pay for that because I do a lot of stuff with my taxes, and it's always good to get that. Yeah, so especially if you're doing something like this, if you're just entering in like your W-2s, it's pretty straightforward. But if you have some complex tax situations, and when you start getting into self-employment and all this, definitely have some complex tax situations with all this type of stuff. Probably better safe than sorry. Last year when I did it, it was the first time I got the CPA help, and she was like, I really think that you need to separate your expenses more into more specific categories. Like you need to be more specific with how you're separating your categories. I said, okay, fine. Because he said like they can audit you for that. Or that would be a reason to give them to audit you. I guess donations are basically just treated as general sales for the business. Donations are treated in the same way. So when it comes to the tax definitions, it's a tip. A donation in tax language basically means like a charitable donation to like a church. You are getting a tip, the same type of tip that you would give your waiter at a restaurant. You are being tipped for entertainment purposes. It is considered taxable income. So like if you went to a piano bar and you tip the guy playing the piano, you're tipping because of the entertainment service he or she is providing. Poseidon buying the 100K, man. Thank you. So yes, for every dollar you get tips, you owe that. Basically, the tips of PayPal get recorded as sales for the business at that point. It would look at as business income, right? So like if I got a donation from Law for $10, it would show this. And then what you would also have in the case of PayPal is I would have like PayPal fee lol 281 or whatever like this, and it would be like 0.58 or I don't know. And then it's transaction fees, how it would appear. And then that becomes something that's deducted from that. Yeah, so like the fees you get, but it would be considered as income. No, it's just income at that point. Tip is income. If you get a refund, you just exclude it. If you buy an item and then you send it back and you get a refund for it, you just exclude it. Unless the item was different, then you would only deduct the amount that you lost. Like I bought this item for $12 and it was $100, but I didn't actually get to keep it. But you still lost $12 because you have to ship it back or something and it cost you money. Like, transfers are a different type of category. If I'm transferring from PayPal to my bank account, right? If I'm taking a personal withdrawal, this is a good one. But like if I'm like, hey, I want monies, right? Because I'm wanting the business to pay me. I want to take $500 out. Hey, guess what? Personal withdrawal. Bam. Company paid this amount to me. Guess what? It's not taxed because you're now receiving it personally. So the company, it's not a deduction according to the company. But it's also considered a transfer. You're transferring it, but is a transfer type of a personal withdrawal. What you'll see a lot with PayPal too, and what was really annoying for me, is currency conversion. So like if I got paid in a currency, PayPal handles all the currency conversions and everything for you. I just exclude anything that has the word currency conversion in it, because at the end of the day, they will calculate their estimation of how many Australian dollars that was. And that's how much this tax will show you. So if something was given to you in Australian dollars, and it will show up here as like AUD, but it will still give you the US, what they consider the US alternative. And this is used to estimate. It's not exactly 100% correct. It's estimation. At the end of the year, you can, especially if you do a lot of transactions with PayPal, you would get a 1099K from them, right? If you have over 200 transactions or over $20,000, you would get a 1099K, and they'll just tell you how much they made or how much it was given to you. So it gets kind of weird with PayPal. Is that to like play with that one? Oh! God, if Law tipped $10, that is $10 from Law. Donations from Law. Subliminal message. Success here.
Stuff all you want, but leave my crap alone.
Law with a $10 donation. That's Law's custom donation animation. So yes, I actually have to owe taxes on that $10. Actually, PayPal was sending me like $9. And if lol, you know, oh look, let's add a transaction here. Lol, donation from lol 281 for $10. Boom, he donated again. This is income. Bam, bam. And I have the PayPal transaction fee of 58 cents or whatever it would be. Then boom, my taxes went up like $1, right? It's not more work. A lot of, like I said, a lot of this is just downloaded and put it in here automatically if you attach your bank account. So you don't really having to do all of this manually unless you paid for something with cash for business reasons. Then you would have to do it manually. But can you be a professional tipper? Are you earning income from doing that? From tipping people? Are you then also earning income? Then probably not. Oh yeah, it has an option for it has an option for every bank, even like local banks, like one-off banks. It's gonna have stuff for them. Yeah, no, it's pretty. They got a big list there. I mean, I can. You get like a trial if you guys just want to go set it up and play with it. You can attach all your stuff like that. Then it pays for it after. I don't know what the trial is, but it's like time's running out. So I don't know how many days you get to use it for free. But yeah, like if it's like, oh, like I do all my student loans from Navient, right? Like there's Navient in here if I wanted to attach it for whatever reason. I don't know if you guys have stuff, we can look it up. Like if you have an idea of like something you want, but yeah, PayPal. It's the 30-day trial. There you go. You can play with it for 30 days, see if you like it, and then start paying for it. Like I said, like the basic version is $5 a month, or it looks like it was like $13 at least for the first month for if you wanted like the full suite of like the app and everything. But yeah, they have all sorts of different accounts you can attach. I was just doing it manually because obviously I don't want my personal accounts cash on this one. So, because like my name is Mr. Actually, I think I put my first and last name is Mr. Goes from Texas. That's what I filled it out with. Yeah, anytime I've ever needed their support, they've always been really, really good with it. Always got my stuff fixed. Never had a really bad problem with their support before, either on TurboTax or this. Always felt Intuit support line. It's always been pretty good. What about charity streams? Then you receive the money for charity, and then that donation from you top the charity. Is this something I missed or coming out? No, you would be charity. Now, what's interesting is charities does have a place in TurboTax, but charities doesn't actually have a place in here, which is kind of interesting. Like there's not a charity transaction, which is actually one thing that I really wish that they would do, but this is still a relatively new product. It's only been out for like a few years. But yeah, I always thought it was weird that there wasn't a charity one in here, but what I would do it as would be, see, you want it to not count. I don't even know how I would do it, to be honest. Because you don't want it to count in your normal Schedule C's, but it is taken off as a deduction, but at least when you go to TurboTax, it's like in a separate section. I would probably just exclude it and keep track of it separately from this. So when the transaction came in, it was a charity to Extra Life or whatever that I made personally. I would just exclude it because there's an option to an exclude. When you expand this out, there's like an exclude checkbox for any downloaded thing. I don't think there is a... No, see, there's not a donation. I would exclude it and then keep track of it separately. And then when it comes to TurboTax, then do it then. That's how I would do it. But yeah, I've always thought it was weird that they didn't have a charity one in here, or like a charitable donation. I'm glad you like it. But yeah, so yeah, yeah, in that case, and this was one of the reasons that I personally did not want to. It took me so long to want to do my first charity stream. I'm doing my first charity stream on Saturday, actually, for Extra Life, is because I didn't like the idea of people paying me PayPal taking a fee and then me paying Extra Life. Because A, in that case, they can't get any charitable deductions that they may qualify for. And 2, PayPal is getting a chunk of something that's going to charity, which is kind of dumb, especially if they donate like $1,000, then $50 of it is going to freaking PayPal. That's $50 less for the charity. And 2, it just becomes weird when it comes to your taxes, because then you're right, it's income then with a deduction or whatever. So Extra Life is nice because they just donate directly to Extra Life. The money actually doesn't go through me at all, right? Sponsoring a Little League, yeah, I've never done anything remotely close to that, so that'd be something to definitely. Central Bank of the Democratic People's Republic. Okay, United States law. Be funny if it was in here. No, there's nothing Korea in here. United States. First Bank of Crowley, Louisiana. Okay. This is all US based stuff. That was been everything in my tweets and everything else. So, yeah. But yeah, like, guys, like, ask me any questions. If you have, like, very specific questions, that's more or less it. Like I said, I can go into TurboTax if you have a specific question there. I was going to go into it because I know J-Stron and, like, T-Love are here, but I think they've all left. But if you guys have any specific questions, you want me to go back and talk about anything again regarding LLCs, regarding taxes, regarding how I would handle a certain situation, ask me. I'm going to upload this to YouTube. It was a very good review. I'm glad you guys like it. I've actually been working on this the last couple of days, trying to, like, if you saw all my notes and everything, like, I just have, like, pages of notes that I was, like, doing all this. And, like, because a lot of this stuff I kind of know, but I didn't know, like, specifics, and I wanted to be able to give specifics. Or whatever, but yeah. I've been doing it a while. I feel confident in doing my taxes personally through TurboTax. I still use their CPA review. That was like, what, 3 hours? Because we started at 6:30. It's giving a discussion. That was a 3-hour discussion. Oakwood Bank of Texas. All right. Law's trying to challenge us here. Oh, I actually logged out of this. Hold on. Per Google, it's the smallest bank in America. That'd be hilarious if it was there. All right. Let's see. See, they would have to have at least be a big enough bank where they would have some sort of electronic system that allowed this to happen. Let's see. What is it? Oakwood Bank of Texas. Is oakwoodbank.com Oakwood Banks of Texas? Oakwood Bank of, yeah, Texas. So that's it right there. Oakwoodbank.com. That looks like Fort Worth. I think that is Fort Worth. Is that Fort Worth? Or is that Houston? Nah, it's not Houston. No, I don't think that's Fort Worth. No, it's the oh. I don't know what freaking city this is. Is that Dallas? No, I'm trying to think. Is it the Comerica building? Hell, I don't know. Easier not seeing the good side of Dallas, so. Masons, yeah. Yeah, so that's pretty good that they got that. Yeah, they've got a lot of stuff. Like I said, you know, they're not going to have, like, Streamlabs in here because you do have... It'd be kind of funny if there was, like, Streamlabs in here. Humble Bundle for your accounts over there. Not really managed, but they just pay you account anyway. So if it's, like, payment from Streamlabs, or, like, when I withdraw my money from Streamlabs donations, for people who pay with credit card directly on Streamlabs, that doesn't go to PayPal. That just stays in Streamlabs, and then I would draw it over here. It would just be a income from Streamlabs at that point, and I would categorize it properly. But yeah, this is a great app. I definitely recommend it if you're gonna really want to get in here and do all this type of stuff. So. Any questions? Feel free to ask me your questions, guys. This is what I did this for. I want to try to give people some infos. And feel free to whisper me. No, you go look up your own bank. You can sign up for a 30-day trial. Go find the one obscure bank in America that doesn't freaking on the list. If that's what suits you. We're overwhelmed right now than being able to ask questions. That's fine. You can always ask me questions later. Get sponsored by Intuit and do this every year. Yo, Intuit. Professional variety streamers should sponsor me, yo. If you guys want to ask questions to me just as a whisper, then I won't tie your name to it. That's fine. It doesn't seem like anybody really has any questions. So I guess that's it. I guess we're done. I know nothing about investing. I thought about doing one over stream settings. Like how to set up a stream. What are all those numbers and little knobs and everything that you do? I could do one over that. Really technically explain how streaming works and what it's doing, in a technical aspect. I know a lot about it. That'd be fun. That would be a fun one to get Matt and Stefan on. I think I could probably ask them. Yeah, maybe I'll think about it. I'll think about it. But yeah, I guess I'm gonna go ahead and stop the recording for YouTube. You guys are good, right? I'll go ahead and stop it right here so you guys can all say bye, YouTube, and it'll be on the chat. No, there they go. There they go. Bye, TubeU. Bye, YT. It's so many people are just lurking right now. Something else. I have 400 people on YouTube. I think, if that. I don't do regular YouTube. Yeah. Sub to Ghost, not PewDiePie. That's funny. Alright, I'm shutting down this recording.